ત્યાં છે ને લાસ્ટ પાર્ટિસિપન્ટ નું છે ને ત્યાં આગળ હશે.
મને નથી આવતો ઓપ્શનમાં.
એક મિનિટ.
You guys start, make me co-host. I will try and do it from phone. You guys start the meeting. Make me
Okay.
co-host.
So we are starting. Good morning, all. First of all, on this Sunday morning.
Meeting is disabled.
Hey, you know. Okay. So good morning, all. On this Sunday morning, we are having very interesting topic, and I am sure that all are very much curious on what are the issues. Ek minute, some echo is coming. Double sound is coming. Hello. So I am sure all will be curious to know all the issues which we are facing in 9(9)(c), and it is always challenging when we are filing 9 and 9(c), because in when we file 9(c), we will have to finalize our 9, because if there is any discrepancy in 9, then we cannot change and we cannot edit it further. So it is always challenging, and we have to go through in detailed manner before we start filing. So we are having a very good speakers today on both the topics. And also one announcement, we are also planning RRC in near future in Feb. So all are requested to block the dates. And topic for RRC will be a very surprising one. I mean, it is right now on the planning stage. We'll announce. So all are requested to block your dates for February. And with this short notice, I would like to invite Mohit Bhai to introduce our today's speaker, Nidhi Madam.
Good morning, everyone. Thank you for joining the GST knowledge session on annual returns and amnesty scheme. The first speaker of the day is Nidhi Khakkar, and she will be speaking on issues in GST and 9 and 9C. So I would like to apologize Jaideep Bhai and Nidhi ma'am. Rather than giving a formal introduction, I would like to give an informal introduction of her. So Nidhi Khakkar is a wife of my cousin brother Reno Khakkar, a mother of a 3-year-old, and a chartered accountant by profession. I remember 7 years ago when GST was introduced, she had taken a lecture on GST annual returns only with Janak Bhai in one of the auditorium in Malad. So that day and this day, despite having a 3-year-old son, she has been consistently delivering content on GST in various forums. She is an inspiration to all male chartered accountants like us, who always cry that updates or notifications padne ka time hi nahi milta hai. So, but of course, equal credit to Reno Bhai, who helps her and motivates her to deliver lectures and give content. These two are truly an ideal couple for us. So with this brief introduction, I would like Nidhi ma'am to please take over this lecture.
Thank you, Mohit. Thank you so much for that words. Apart from being always appraised in profession, we always like to hear this, that in spite of having a 3-year-old kid, we are in this field and we are up to the mark with all the males who actually have only this profession work to do. Anyway, I also thank you, MCTC, for giving me this opportunity to share my insights once again, though this time I'm not having my mentor with me. But I always admire being with Janak sir. It was wonderful lecture that day, and it can never be recreated again. That moment was really precious for every one of us. It was an amazing session.
Nidhi Madam, sorry to interrupt you. Before starting, I would like to present you a memento which we have already delivered to you. So you can just...
Thank you so much. I'm having it with me to cherish this day again. Once again, thank you so much.
Our pleasure.
Okay, let's begin, because the time allotted to me and the issues, really are inversely proportion at present, because with every issue I take up, I'm sure there will be variance everyone with all of you. However, I'll try my best to do justice to the time allotted to me. We'll start with the session. I'll share the screen and begin. So issues in GSTR 99C. What are the issues we'll be discussing? First of all, we should always analyze whether the forms are applicable to us or are applicable to the taxpayer or not. Then the outward supplies, inward supplies, the tax payable on reverse charge basis, and the correlation with between 9 and 9C. For applicability, these three are the core points which you should analyze. First of all, the aggregate turnover definition as per section 2.6. Then there's the latest notification which is issued every year to give the mandatory guidelines regarding the filing of GSTR 9. So as per this notification, the mandatory guideline says that if the aggregate turnover for a taxpayer exceeds 2 CR, it is mandatory for them to file GSTR 9. And for 9C, you will have to refer Rule 83, which says if the aggregate turnover exceeds 5 CR, filing of GSTR 9C is mandatory. So in both cases, the word aggregate turnover is very eminent, and that's the reason we should refer it as per sections 2.6. I have just split that section to understand that what is the aggregate value of taxable supplies, aggregate turnover, and how we should compute that. So it's aggregate value of all taxable supplies. However, it excludes the value of inward supply on which tax is payable by a person on reverse charge basis. So if you are paying any taxes on reverse charge basis, say on the transport services or on the advocate services, rent-a-cab services, and now rental services as the latest addition in the reverse charge list, we should exclude that turnover amount from the aggregate turnover. However, it will include the exempt supplies, export of goods, services, or both, and the interstate supplies of that person. Now, this amount should be calculated for all the taxpayers having same PAN. So, as we know that even a single entity will have n number of registrations or spread all over India wherever they are having their business. So, all under same PAN, all these amount will have to be aggregated to come to the total amount and check the applicability of the filing. But you have to exclude, it specifically says central tax, state tax, union territory tax, and cess. So the taxes which are there under this act are only excluded. Any other taxes apart from these, if added in the, if there is the outward supply of this category, we will have to add it to our aggregate turnover value. So who is required? We just had a brief reading about the section 2.6. So based on that, who is required to fill this form? Every registered taxpayer whose aggregate turnover exceeds 2 CR will again have to check for another category to check the applicability of 9C, which is if the turnover is up to 5 CR, then only GSTR 9 filing is mandatory. If it exceeds 5 CR, then both the forms of annual return 9 and 9C reconciliation statement will have to be filed. And if your turnover is not exceeding 2 CR, it is not mandatory for you to file form. Other than, however, every registered taxpayer excludes these taxpayers, which is ISD, casual taxable person, non-resident taxable person, and person paying tax under section 51 and 52. So these categories are having separate forms to be filed, the person paying tax under section 51 and 52, and the rest of, for them, the annual return form is not applicable. For applicability, let's have a case. Say you have turnover, you have registration in Maharashtra, Gujarat, and Delhi. For the turnover in Maharashtra, it is 1.5 CR. For Gujarat, it is 1.8 CR. For Delhi, it is 3 CR. So we again go to section 2.6 for the definition of aggregate turnover. And according to that definition, our aggregate turnover comes to 5.3 CR. Now, what are the questions which arise in our mind? Whether the filing of 99C will be mandatory? If yes, to which GST? Whether state-wise financials will be required for each GST? And can the unaudited financials be attached? Now, since only the GST registration is state-wise, our PAN is on PAN or single PAN for in all India basis. So the ITRs, so the audit, everything will be consolidated only. However, only the GST returns will be separate. So whether filing of 99C will be mandatory. As we have already seen the definition, it says that you have to compute the aggregate turnover on the having same PAN on all India basis. So the condition we will be analyzing that 5.3 CR will be the turnover on the basis of which we will decide whether the form is applicable or not. So the form 9 will be applicable, yes, because it is exceeding 2 CR, and even 9C will be applicable since it is exceeding 5 CR. Also, if yes, to which GST? Will it be applicable to only Delhi or any other? See, the returns, annual return will be filed GST wise individually. So 3 GSTR 9 and 3 GSTR 9Cs will be filed in this case. However, to compute, to check the applicability, we will definitely combine the turnover, but the filing will be done on individual GSTs only. Now, whether the state-wise financials for each GSTs are required or not. According to me, yes, you do need separate financials, preferably at least to compute, because the filings will be done GST wise. So while filing GSTR 9, we have to reconcile the turnovers from GSTR 1, 3B and books. So for that, you need some working, at least a trial balance will be required for each GST to reconcile all the amounts with the filing, regular filings done. And can the unaudited financials be attached? When we come to 9C, and I'm sure most of us have filed and already seen 9C, so their financials are to be attached along with the reconciliation statement filed. So can the unaudited financials be attached? According to me, you should not attach those unaudited financials. We should take the consolidated financial statements, which are available, audited financial statements, and we should give the relevant reconciliations based on the amounts in the consolidated financial statements, and each reconciliation with each GST's turnover working of GSTR 9. However, if there are any issues, you can just post a query and I can address this. If whatever I'm saying and you are having any doubt or any variant in the issue, you can just post a query. I'll definitely address to it. So issue 2. Now, for example, turnover as per GSTR 3B. The annual turnover, you combine the GSTR 3B for all the 12 months, and we have a turnover of 4.85 CR. Dividend income as per PNL, it will be 0.25 CR, and interest, it will be 1 CR. Now, this turnover, which what we use the word, is generally shown in revenue from operations head, correct? And the other income, dividend, interest, and any such income is usually shown under indirect income. So on the face of balance sheet, it will be 4.85 CR. But if you see the entire income side of that, you will have a turnover as per financials of 6.1 CR. Note that in dividend and interest were not reported in 1 and 3B filing. Definitely it may not be reported, because when we are filing monthly returns, hardly this information will be accurately available in small cases, especially this dividend, interest, and even if available, we tend to overlook. We always see the invoices which are prepared and the turnover or based on those invoices. So anyone who can just say whether we should include the dividend or interest, and what turnover we should consider to check the applicability of 99C, 4.85 or 6 CR, or any other combination. You can just reply or drop a message. Okay. See, according to me, the form GSTR 9C will be applicable, though the dividend is not a GST supply, but we consolidate that amount and we check the applicability. GSTR 9C and 9 will be applicable. Interest will be included in the exempt category. However, dividend is actually a no GST supply. So we will include to check the applicability, but that dividend amount is not reflected anywhere in 3B, and we may not even, we would report in table 5. We will see that bifurcation. Dividend will be included in table 5 and under no GST supply. And we will definitely file 9 and 9C both for this taxpayer. Dividend will be under no GST supply category, and interest will be exempt category. I see a couple of replies. Thank you. You may have an view which is different from me. So that is okay, but this view is mine, that we report it like this, and we definitely file 9 and 9C for this taxpayer. So once we have checked the applicability with all the issues we face, let's prepare for gather all the information which will be required to fill this form GSTR 9(9)C. So first of all, you require audited books of accounts. Then all the system generated forms which are available on the portal. When you go to annual return tab, you can go to filing of GSTR 9 annual return. You will see the tabs of system generated 9, consolidated system computed 3B, which is nothing but a consolidated 3B of all your 12 3Bs filed, GSTR 1 consolidated, and a table 8A, which is the most interesting table. So I'm just having a query asking about a proprietorship firm concerns, can we exclude interest and dividend both, since they need be in furtherance? See, if it's part of your financial statements, it is difficult to bifurcate that it is not for furtherance of business. So ideally, interest should be added to the aggregate turnover. Dividend, as I said, it's a no GST supply, but interest will have to be added, and you have to compute the applicability accordingly. It's a part of the financial statement. When it's a part of financial statement, we should, even if it is not, how will you bifurcate that it's not for the furtherance of business when it is already part of your financial statements? So even for a proprietorship concern, you will have to consider the interest amount and arrive to the aggregate turnover value and check the applicability. So getting back to the preparation list, the system generated and consolidated forms which are available, readily available from the portal, we should always download those forms. It will help us. It will help us in checking the computation, because sometimes when we have our workings, Excel workings with us, but the final form which is uploaded on the portal is the form with which we have to prepare our reconciliations. Cash ledger, credit ledger, and liability ledger as downloaded from the portal. HSN summary, ITC bifurcation into inputs, capital goods, and input services. monthly invoice levels summary. Now, why monthly invoice level summary? Because any reconciliation or to decide any effect of the extra claim or reduction in liability or any additional liability, invoice level information is very important as far as GST is concerned. We cannot just say that in books my turnover is say 1 CR and in my 3B it is 1.8 0.9 CR and the difference is my additional liability. You need to have the monthly invoice level information, and coming forward to e-invoice applicability. So for turnover exceeding 5 CR, e-invoice is applicable. So in that case, this correlation is very important, and even with e-way bill. So you need to have invoice level information for all the filings. Even in GSTR 3B, the details go in total. But your working papers, monthly working papers should contain invoice level information or invoice level bifurcation for those total advances which are yet to be billed. Why this is important? Because the invoice advances which are yet to be billed, once you receive an advance, you have to pay GST. I'm talking about advances received on services. For goods, it was back then in 2017, which they had discontinued with that provision, and right now it is only advances on services. So the advances on services, GST will be paid on it. So you are having a liability to be paid. However, they are not forming part of our PNL because those are advances in our books of accounts and they are a part of our balance sheet. However, you should take the list or a summary from the taxpayer of those list of such advances and the liability they discharged on those advances and when are the liability discharged. Sales, purchase, credit note and debit note registers, and reconciliation between books 3B and GSTR 1. ITC, ineligible and reversed. So the list of you should also have a registers list, invoice level working for all the invoices which are ineligible and which are reversed or which are pending to be reversed in any case, but you should have that list. Transactions reported for previous year and reported in the next year. So while filing GSTR 9 form, you will come across tables which require reporting of transactions which were occurred during the financial year, but they were reported in the subsequent financial year because we already are aware as per 16(4) there's a time limit of filing up to 30th November. If you are having any file pending effect of 23-24, for example, you can incorporate that transaction of increase in liability, reduction in liability, increase in claim or reduction in claim in any of your returns filed from April 24 to October 24, provided the filings are done up to 30th November 2024. So you need to have, again, list invoice wise list you should be having for these transactions. ITC on imports and taxes paid on reverse charge basis and any other detail. After analyzing all of the above, if you realize or if you find that there are still details which you need to have from your clients, we should be ready for it. So while giving the list, always add this any other details as and when we come across, we will be sharing the list. So after checking the applicability, getting the documents ready, we will start with filing of GSTR 9. GSTR 9 has 6 parts. The first part is basic information. It is automatically, once you open your tab, that comes automatic. Your GST number, your annual year for which you are filing, your trade name, legal name, etc. Then part 2, which will have details of outward supplies. Part 3, we will have details of inward supply, that is ITC. Then part 4, details of taxes paid. Part 5, details of transactions declared in the next financial year. Part 6, the other information. Instructions for GSTR 9. So that the form itself has instructions of filing the form with how you should file or what figures are they expecting in those tables. So these two are very important, which there are other instructions also, but I have enlisted here only the two of it because I feel this is the most important, the base of this form, and we hold this thing that this is the way we are going to report, and think every transaction which is having a variance or which is having a difference, you think on these lines and then decide on which table it will be entered. So the instruction says in table again serial number 4, 5, 6 and 7, values pertaining to financial year only are to be reported, and value pertaining to preceding financial shall not be reported here. So one thing is very clear, the transactions of 20 to 23, right now I'm always talking about 24, 23, 24 only because that's the latest form most of us will be filing unless they are having any backlog of earlier years. So I'll be talking about form 23-24 only. So 22-23 transactions, if any, reported in the reported in the forms of 23-24, 1 or 3B, will be excluded from these tables. Next, additional out, and one thing they have very clearly mentioned right from 2017 itself, that additional output tax liability can be declared in table 4. However, taxpayer cannot claim any additional ITC through this form. So this form is only to do vasuli, you can say. So any additional liability you add in this form and pay through DRC 03. However, you cannot claim any additional ITC because the time limit of 16.4 says 30th November and we are filing this form after that. And even if you file before that, since the form specifically says that you cannot claim additional ITC through this form, we will not be allowed to do so. However, if the workings and reconciliations are done before 30th November, we will be in a position to claim that additional liability in our regular forms since we are in time of the 16.4 limits which are given. So the transactions pertaining to previous year will not be reported. Recent updates. So notification 12 dated 10th July, which gives the basic changes in the form. So wherever the financial years were mentioned, all are replaced to 22-23, 23-24 and 24-25 wherever they were changes were required. There were some basic changes were notified, and also the turnover of 2 CR, because that annual return earlier was applicable to all. Thereafter, they came with the notification giving option to taxpayers having turnover up to 2 CR of not filing the form. So they issue this notification every year. So for example, if they are not issuing it in the next year, the form becomes applicable to all taxpayers. And then they came up with the notification 20 on 8th October, which said that the table 8A will be auto-populated from 2B. अब टिल नाउ हम लोग इतना वो सेट हो गए थे कि वो 2A से जनरेट हो रहा है. 2A के जो इनवॉइसेस जो 30th नवंबर तक हाँ suppliers are giving in GSTR1 will be auto-populated. We had that set. Now again this thing has come up that they will be auto-populated from 2B. So again those reworking will be required. We will see in our further slide that how this 8A algorithm of 8A which they have changed from 2A to 2B is affecting our reconciliations. So, and also these are the 2 new rows which are added for e-commerce transactions. Supplies on which e-commerce operator is required to pay tax under section 9(5), including any amendments. So all the amendments, addition, reduction, whatever are there, it has to be net and shown in this table 4G1. E-commerce operator is required to report here. Then you have table 5C1, which says the supplies on which tax is to be paid by e-commerce operators as per section 9(5), and supplier is required to report under this head. Now table 4, what are the peculiarities of this table? What I understood this table is, so it will have details of outward supplies on which the tax is payable. So while checking the applicability of aggregate turnover, we used to exclude the transactions which on which the tax was payable on reverse charge basis. However, we will report that transactions in this table 4, because even though we are paying on reverse charge basis, we are stepping into the shoes of the supplier, and we will be discharging that liability as outward liability, and we will pay the taxes. Outward supply, nay, outward liability. That is only the wordings we use always. Also, this form is auto-populated from GSTR1. Now, why GSTR1? Because if you see the table of GSTR9, it has bifurcations. B2B, business to business supply, B2C supplies, credit notes, debit notes, amendments, and then you also have the zero-rated supplies on which the tax is payable. So all this bifurcation is available only in GSTR1. While filing GSTR 3B, these bifurcations are not available, and hence the values are auto-populated from GSTR 1. But the inward supply on which the tax is payable on reverse charge basis, that particular table is auto-populated from 3B, because that inward supply ka details is not reported in GSTR 1. And since the invoice level reporting is done in GSTR 1, it excludes the transactions pertaining to previous financial year. I think they have started this from 2019 or so, I suppose. Earlier, they used to get auto-populated. We used to manually reduce those turnover. But now they exclude that turnover and they give us the amounts. However, it needs to be reconciled with 3B and books, and the fields are editable, and you have to update those fields accordingly. So 3B and books will be the base. First, you need to analyze the transactions, whether the transaction is available in 1, 3B books, where it is available, where it is not available, and what actually has to happen. So if the transaction is available in books, that means that transaction is supposed to be reported. If it is not reported, you are supposed to amend those table 4 amounts to the figures which are actually to be reported. And again, I earlier also mentioned that transaction level reconciliation is a must when GST is concerned. So the outward supplies. Now, in very simple terms, if a outward supply is reported in 23-24 itself, we will use the table 4, 5, and 9. And by mentioning that reported in 23-24, I mean reported in 3B of 23-24. Table 4, 5, and GST and table 9 will be used to report these transactions. Now, if the transaction was not reported in 23-24, if we have used the 3B form of 24-25 to report those transactions and within the time limits stated in 16.4, then those amounts will be reported in table 10, 11, and 14 of GSTR 9. And for example, we have missed the reporting of that transaction completely. Neither we reported in 23-24 nor we reported in 24-25. The same will be reported in table 4, 5, and 9. And we always know that once we show or report any transaction there of outward liability, we need to even pay that liability. Once you make a challan, you make the payment, it gets added in your, credited in your cash ledger. Thereafter, you will use DRC 03 and discharge that liability and get it resolved. I will advise you to always use the specific amount challan. So if there is an additional liability of say 50,000 as per the reconciliation and payable of GSTR 9, you should make a separate challan for that 50,000 and file a GSTR DRC 03 for that. So the documentation get in flow unless you have huge accumulated cash balance already available in the cash ledger. I will advise you to make a separate challan, and so that documentations go in line. You can just mark those transactions and you can show whenever there is any assessment or inquiry from the department. So let's analyze that issue with some amounts. So GSTR 1 of 23-24, The bifurcation goes like this. B2B had 10,000, B2C has 2,000. So our turnover reported was 12,000. Now, while filing 3B, we missed out an invoice of 2,000. This is a rare case now because the figures of GSTR1 are auto-populated in 3B, and very rare case that it missed reporting in 3B. However, I've taken this situation just to understand. So the table 4 will have auto-populated amount of 12,000. As I mentioned in the earlier slide, that the table 4 figures are taken from GSTR1. However, we discharge our liability through GSTR 3B, and hence this amount will be the actual amount to be reported in table 4. Now, that missed 2,000 rupees invoice was reported in 3B of 24-25. And hence, this difference of 2,000, how will you take this in GSTR 9? So 9 will be auto-populated with 10,000 in B2B. So we will change that to 8,000 because 3B did not have the liability discharge for this 2,000 and it was discharged in next year. So this will go, 10,000 will be replaced with 8,000 in table 4 and rupees 2,000 will be shown in table 10. 12 for 24-25, we will not have any impact. This 2,000 we will exclude from 24-25. We will show in table 10 of 23-24. And whenever we are using showing liability in table 10, 11, reduction in liability, the relevant table 14 is to be updated accordingly. Now GSTR 1 of 23-24 is having a transaction of 10,000, the same situation. However, even in 24-25, we have missed reporting of that 2,000. Sorry, there's a calculation error. The total is 13,000. So we missed the reporting of 2,000. So now where the figures will be reported? GSTR 1 will be table 4 will be auto-populated with 10,000 and we will keep that as 10,000. Why? Because the difference of 2,000 which was not discharged in the next year is to be discharged through using table 4. Table 10 will not have any amount because that 2,000 was not reported in the next year at all. Now, issue 3, books of accounts. So, books of accounts has a turnover of 8,000. B2B supplies were 10,000. Credit note of 2,000 was there. So, the net turnover comes to 8,000. Now, 1 and 3B, we have accidentally missed showing the credit note, and 1 and 3B was filed with 10,000 and hence the total is 10,000. We need to analyze this situation. Now in this situation, there is no additional liability. In fact, there is a reduction in our liability. So the instruction, the earlier slide, the instruction already mentioned that additional output liability you have to disclose in 9 and you can pay in table 4 and you can pay through DRC 03. However, additional claim of ITC is not available. Even though this is not additional claim of ITC, this is the reduction in liability. So this thing is also not possible in GSTR 9. However, while filing this form, you will report the turnover, the auto-populated amount will be 10,000 in table 4. But since we are supposed to update, we have to give a correct amount of our outward supplies, we will make a change to 8,000. We will change it to 8,000. And since this was not reported even in the subsequent year, we will not show anything in table 10 and 11. Unless that transaction has flown into next year in GSTR 3B, we did not show anything in table 10 and 11. So credit note amount we will change this table 4 amount from 10,000 to 8,000. However, the benefit of 2,000 or the reduction in liability will not be available, but we need to at least show the correct amounts as per our books of accounts. Now, this is a very particular case. as we all are aware that negative figures were earlier not picked up in GSTR 3B. So while filing one, you have reported a B2B transaction of 2,000 and a credit note of 5,000. So your GSTR 1 was filed. There was no issue with this. It showed you that total of minus 3,000. However, when 3B was auto-populated, it was 0. Now, why 0? Because 3B did not accept negative figures earlier back then. Now, recently, if you try filing November GSTR 3B, I think it does accept a negative figure. But the time limit of that 30th November is already passed. So next year also we could not report that transaction. Again, I will say that table 4 will be auto-populated as per the filings of 1. We will keep them as it is, even though that benefit of credit note was not passed on to 3B and the reduction in turnover liability was not given to the taxpayer at the time of filing 3B, but we will show the correct figures which are in the books of accounts, and we will report accordingly in table 4. For reporting in table 4 and 10, always refer to 3B and books of accounts. Even though it is auto-populated from 1, the auto-population from 1 is only done because of the bifurcation available from 1. So I had this query which said that credit note was issued in March 23, was reported in 3B and 1 of May 23. It will not be reported. Yes, it will not be. In case we increase the tax payable, it will not match with the tax paid, and ITC as amendments are not allowed in 9 form. Correct. But you should exclude that transaction. That a differential amount should match with the credit note of March 23. So you can always have your working and table by explanation to that difference amount. So need not worry, even though it is showing that liability column of table 9 will increase, but the tax paid through ITC and cash will not change. You need not worry. You keep an explanation. That's the reason I mentioned that invoice level working is very important. So if your difference is whatever the difference is coming in table 9, which is showing an additional liability, which is not actually a liability, you need not pay that liability. You keep your reconciliation ready. The turnover auto-populated as per 1 was X amount. Credit note of 23, March 23 reported in 23-24, you add that and then you come to the turnover of 23-24. But the tax payable amount has to be increased in GSTR 9. That thing has to be done to match with the liability or the amounts of table 4N. I'm running a bit quick because of the shortage of time. So this table 5 is all the taxes, all the southward supply on which the tax is not payable, you have to report there. There is not much issues in this, I feel. But you should be very careful while filling this table, because whatever details you give here will be part of the aggregate turnover, and it will flow to table I forgot the table 5 of 9C. So please be careful while picking up this, filling this form. Table 6, just some peculiarities of table 6. It is auto-populated from table 4A of consolidated 3B, and it is not editable. Unlike table 4, which was auto-populated from GSTR 1, and we could edit those figures, the table 6A, which is auto-populated from table 4A of 3B, it is auto-populated, but it is not editable. Please be very careful from where the figures are taken, because then you will be able to prepare the invoice level working or reconciliation for each of the auto-populated amount. The bifurcation is to be reported in 6B to 6H. Bifurcation with respect to the all other ITC. All other ITC is split into input tax credit from input ITC on input services and capital goods. They are to be reported separately. Therefore, I earlier mentioned in the preparation list to have this sheet ready. I will advise you to have a big Excel sheet of ITC register wherein all the details of GST, then whether they are inputs, HSN, you prepare that thing. That will be a big data for you, from which you can extract those details as using all the Excel tools and take the figures accordingly. You add two columns there, whether available in 2A, whether available in 2B, and in which 3B you have claimed. April 23, April 24, whatever. That big table or that big ITC register will be very helpful to you. Trust me. And Excel tools are life-saving for us and in GST era. I don't think I have ever used Excel before GST. Inward supplies on which the taxes pay on which taxes payable is to be reported separately from registered and unregistered suppliers. Sorry. Now input tax credit. Again, there are three major situations that we have reported in GSTR 3B of 23-24. So we will be using table 6, 7, and 8 to report these transactions. And if they are reported in next year, 24-25, subject to the time limit specified in 16.4, we will use table 8, 12, and 13. Now, for example, not reported at all, just like our outward supply. Unfortunately, if we have not reported at all, we cannot claim additional ITC through this form, which was very clearly mentioned in the instruction itself, right from 2017. However, if there is any reversal which you have missed, which you could not do, which was not even done within the time limit specified in 16.4, that reversal can be done using table 7. And whatever is the, once you say it is reversal, that means there is a payment of tax, which is already allowed as mentioned in the instruction itself. And we can use DRC 03 to discharge that additional liability due to reversal of ITC. Now, issue, I think most of us must be waiting for this slide to be discussed. Which it says that ITC of 23-24 as per GSTR 2B. So that consolidated GSTR 3B, which you have downloaded, it says that the entire year ITC is 10. See, for simplicity or for clarity of things, I'm taking very small amounts and I'm assuming that the other things are in place. So ITC of 23-24 as per GSTR 3B is auto-populated in table 6A as 10,700. Now this is auto-populated but not editable. You take ITC register from your books and it says that it is still 12,100. Now you need to reconcile this 12,100 and 10,700. While doing GST reconciliation, I many times come across and my staff is like, sir, ma'am, 500 रुपए का difference है. मैं बोला 500 रुपए का difference एक bill का भी हो सकता है, 100 bill का भी हो सकता है. You don't go the difference amount in net. You have to have invoice level working. Because that 500 rupees different is like showing कि ठीक है दोनों में 500 रुपए का ही फर्क है, but it is not that way. That 500 rupees difference can be result of difference due to one invoice, 10 invoices, and even multiple more than 10 invoices. So it is always advised we always advise to have invoice level reconciliation. So my reconciliation says as follows that ITC of 22-23. Till last year, we only had two columns of reconciliation. ITC of 22-23 claimed in 23-24. ITC of 23-24 claimed in 3B of 24-25. Now, it has widened. The only reason for this is that 8A is auto-populated from GSTR 2B. So now it becomes very relevant to even check that this ITC which has been claimed in 3B is available in which year's GSTR 2B. So I have split that reconciliation of 2 points to 4 points. ITC of 23-24, which is claimed in 23-24, and it was available in 2B of 23-24. So due to non-availability, it was not claimed in 22-23, and now it is available, hence claimed. However, it was available last year in 22-23, but due to whatever reason, we had not claimed that time, and within the time limit specified under section 16.4, we are claiming it in 3B of 23-24. That amounts to 200. Now, there are some ITC of 23-24, which we have claimed in 24-25 due to availability in 2B of 24-25. ITC of 23-24, we have claimed in the next year. However, it was available in 2B of 23-24. So total ITC, as I said, my earlier reconciliation column only had 700 and 2,100, but now we are having it the bifurcation of 500, 200, 1,100 and 1,000 based on the availability of ITC in GSTR 2B. So how shall we report this? As I mentioned that ITC column amount of table ITC amount of in table 6A will be auto-populated and you cannot edit this. So unlike the outward supply, you could just disregard the transactions of 22-23 and carry on with the working filling of the form of all the transactions pertaining to 23-24 only. However, in ITC, it is not possible. So 10,700 will be auto-populated. However, while giving bifurcation, you will give the bifurcation of that amount to the extent of 23-24 ITC only. This is my view. I follow the instruction which says that the table 4, 5, 6 and 7 are to be filled for the transactions pertaining to the financial year only, which are made during the financial year only. So the difference will be 700 rupees. Now this should match with table 13 of GSTR 9 of the previous year. Because just like this year, we must have reported that 700 was ITC of 22-23, which we have carried forward to 23-24. This table 12 and 13 was optional. However, I used to advise earlier also that reporting of this table is very important. Why? Because invoice level details are not available for ITC. We don't file any forms, unlike GSTR 1. Just a second. So if you had filled this form in table, filled this table in 2022-23, this becomes very easier for you to match with the amounts. And even in case of assessment, it becomes very easy to state that, see, this was my 22-23 ITC reported in 23-24, and this matches with the previous year GSTR 9. So table 8. Now, whatever the bifurcation you are giving in this 6B will get automatically populated in table 8B. So that 10,000 flows from table 6 to table 8. However, this 2B amount, which is auto-populated in 8A, will be 11,500. How 11,500? This amount of 500 which is available in 23-24 in 2B of 23-24, and this amount of 1,000 which was in the available in this 23-24 itself, 2B of 23-24 itself. So it will be 11,500. 10,700, 200 was not there in 2B. Okay, it was in the 2B of 22-23. So that will not be auto-populated. So it will be 10,500. And this 1,000, which was available in 2B of 23-24 itself. So 10,500 plus 1,000, which will be 11,500. That amount will be auto-populated in 8A of GSTR 2B. This 10,000 will flow from table 6, 6B, B and 6H. So it will be 10,000. So ITC availed in the next financial year. However, I have availed 2,100 in the next financial year. I will report in this column to the extent of 1,000 only. Why? To match with this. Now, that amount is given by the portal itself. I'm expected to reconcile that amount. According to me, yes, correct, 2,100 is the amount we have claimed in the next year. But उन्होंने जो अमाउंट दिया है हम उससे रिकंसिलिएशन उनको चाहिए, तो हम वही अमाउंट से अपना रिकंसिलिएशन बनाएंगे. And this is the reason I have bifurcated these ITC amounts in these 4 tabs. This is the difference of 500. Now this ITC will match with the ITC of 22-23, which was available in 23-24. I got a message that my voice is breaking. Is it okay now?
No, it's audible, I guess. So there must be some problem.
On their end.
Yeah,
Okay.
yeah.
Okay, thank you. However, while filling the amount in table 13, we will fill to the extent of both the amounts. 2,100 will be reflected in table 13, which is total of 1,100 and 1,000. So the entire ITC of my 23-24, which I have claimed in 24-25 within the limits of section 16.4, will be reported here. And also if there is any reversal, will be reported in table 12, and the claim will be reported in table 13. So there will be difference in this amount also. Earlier our 8C and table 13 used to match. Now there will be difference between 8C and table 13 as well. So once I report this 2,100, when we go to next year 24-25 and we exclude this amount of 2,100 from table 6, we will have an explanation that see this circular effect is flowing year on year basis. To make that clarity, that simplicity, we will have to report it in table 13. Don't skip reporting in table 12 and table 13. There are few experts or there are few professionals who opt to show this 700 in 6M to avoid the difference here. And accordingly, that difference is also does also flow in table 9C, form 9C. However, this is my view. I go with that instruction. I stick to that instruction. I'm holding that instruction that this is the way the form is to be filled. Last year figures are to be excluded. So to avoid indifference in table 8D, we can use this 8C will be used to fill the ITC of 23-24, which was available in 2B of 23-24, but we have availed it in 24-25. And table 13 will have both the type of ITC, whether available in 22-23 or whether available in 23-24 or irrespective. We have claimed in the next year and we will report it accordingly. Now, issues arising due to reversal of invoices not available in 2B. So when the 2B was introduced, many of us were in worry that how the transactions 2B में नहीं दिख रहा है, हमारा claim चला जाएगा, 16.4 का time limit चला गया, we will not be able to claim. So what we used to do, we used to take the entire amount from books in table 4A5, all other ITC 5,000 as per my books. However, 800 ka ITC was not available in my 2B. So I used to show in other reversals, table 4B2 of 800 rupees. So my net ITC claimed is 4,200 as per GSTR 3B. So I have followed 2B. I have followed the law. I have done everything properly. 800 ITC was available in 2B of 24-25. बहुत follow up किया supplier से, GSTR 1 भरो, 3B भरो, सब follow up करने के बाद उन्होंने finally 24-25 में within time limits of 16.4 they have reflected, and hence we have claimed it in the subsequent financial year. Now, how this will affect our 9? Table 6, that figure is auto-populated from the ITC, all other ITC, and वो जो उसके ऊपर के जो भी है import etc. RCM ITC, उसका total वो लेके 3B में auto-populate होता है. So 6B you will give bifurcation based on the amount auto-populated, you will give 5,000. Table 7 will have reversal of 800 since that was in the others column, since it was not available in 2B. So while filing your table 8, you follow 2B while filing 3B. But table 8 का जो हमारा auto populated amount है वो 4,200 आएगा because 800 is reflected in 2B of next year. However, 6B तो आपने books के हिसाब से करके दिया था तो 5,000 ही वहां पे आएगा, which flows from table 6. So there will be difference of minus 800 जिसका आप कुछ नहीं कर सकते, but you will have an explanation and invoice level working that it was ITC of 23-24 which is reflected in 2B of 24-25, and hence there is the difference here since last year तक वो auto populate हो जाता था in 8A, but since this year they are picking up figures from 2B, this is not getting reflected.
Madam, just a minute. Our next speaker is has joined, so I would like to just request him. We are just stretching 10-15 minutes if you allow, Aditya ji.
No problem, sir. Please carry on.
Thank you so much.
Thank you, sir. Thank you. So ITC availed, but table 8C will not have that 800 amount since it is not there in the table 8A, which is auto-populated. Table 13, however, will have this 800 amount since this was the ITC of 23-24, which we have claimed in the next financial year. I know you must be having all these issues in one, but break the issue and see one amount. वो एक यहाँ पे मेरा 800 आया, which I'm just saying with that example कि वो match हो जाएगा इसके साथ 800 के साथ जो reversal में है. But I'm sure you must be having this issue combined with this issue. So try जो आपका ये bifurcation difference आ रहा है in this 8D. You bifurcate all those on the basis of invoice level that this was the ITC we earlier. वो plus minus करने के बाद वो difference के साथ tally होगा. You will have to keep your reconciliations ready. आप ये method follow करो. There might be another permutation combination of filling this form, but still reconciliations तो रखने ही पड़ेंगे, and that has to be invoice level reconciliation only. So some of the fields are optional in the form. Somebody is asking for the presentation. Yes, I will share with the committee and with the chamber, and you can have it from them. Some of the fields are optional in this form. Say table 5H to 5K. So all the amendments, credit notes and debit notes relating to the outward supplies on which the tax is not payable, you can just net those transactions and report in one particular table itself, which is not available for table 4. Earlier, there was the available option to net the transactions of debit note, credit note amendments and show in the table 4 about table columns only, rows only. But now that is not available. The amendments, the credit notes, outward amendment, downward amendment, all the amendments are to be separately shown in table 4 for the outward supplies on which the tax is payable. And also there's an option that nil rated and exempt supplies you need not report separately. You can combine those amounts and show in exempt column only, exempt row only. Table 6 of as I mentioned that inputs and input ITC on inputs and input services are to be separately mentioned. So if available and if you are sure of those transactions, you report separately, or else you can combine those in inputs. You can report those consolidated amount in inputs row only. However, the ITC on capital goods is to be separately shown. As I've said that 6B will be gross only because the auto-populated amount you have shown that net amount, that reversal amount in table 7 is to be mentioned. So it is better you show in gross basis and have your reconciliations prepared for the difference in table 8D. Option to report reversal of ITC. So instead of showing reversal under 37, 39, 42, 43 separately, you have an option to show the consolidated reversal in 7H. However, I will advise you to show it separately because that 42, 43, wherever there are common ITC, it is very important to have that separate disclosure. Otherwise, in time of assessment, it creates a problem. Table 12 and 13, as I said, that option is there, but do not exercise this option to have that circular flow effect to give that proof कि देखो मेरा last year का है जो मैंने current year से exclude किया है. To have that circular flow of year on year basis, you should disclose in 12 and 13. 15 and 16 are about demands and refunds, which are optional. Table 18 is regarding the HSN summary of inward supply, which is optional, and I'm sure everyone is using that option. Now, tax payable on reverse charge basis. This might take 5 minutes and it's important. So I think we should take this slide. So tax payable on reverse charge basis, tax payable on reverse charge in inward supply pertaining to 23-24, it is reported in the next financial year. Now, there was a press release on 3rd July 2019. Which said that this entire RCM transaction belongs to next year and you need not report in the current financial year. So if you are following that thing, that press release, if you are following that method, then you should report it accordingly. If not, then that tax liability is to be added in table 4 and 10. Why table 4 and 10? I have a slide at the end to show that how that aggregate turnover amount flow from 9 to 9C. So you use that taxable amount in table 4, and the taxes amount you will show in table 10. Because if you show that include that taxable amount in table 10, that flows in your GSTR 9C and will become part of your reconciliation statement in table 5 then. Inward supply pertaining to 23-24, you have not reported at all. So if you are following this 3rd July circular, you can show whenever you want, and that becomes transaction of that year. And if you pay through 3B, you claim ITC accordingly. However, if you're not following that press release and you want to show it in this GSTR 9 of 23-24, you can add that transaction in table 4 of inward supply on which the tax is payable under reverse charge. You add the liability in table tax payable column of table 9. Accordingly, file DRC03 and discharge the liability. Now, what about the ITC claim? Do you think that the ITC will be available on such transactions? It won't be available because again, I go to instructions. Any additional liability you pay through DRC03 disclosed in GSTR 9, any additional claim of ITC is not possible through this form. So this is table 9. This tax payable column, this is editable, and according to me, this should match with table 4N, because that 4N has the outward liability as well as the inward supplies on which tax is payable to reverse charge. So that should match with table 4N amounts. And that's the reason someone asked me about the credit note of March 23 query. This is the reason I mentioned, I have given you the answer to update that according to table 4N. Now this paid through cash and paid through ITC, this cannot be edited. So this remains fixed because additional liability you have to pay through DRC03. You cannot use this, and any additional claim of ITC cannot be done through this form. Late fee and penalty, it is self-explanatory due to shortage of time. I'm not taking this slide. 9C, it is self-certified reconciliation statement. So nothing can be additionally shown or reduced. Nothing can happen in this form. It is only a reconciliation statement. Earlier, it was audit report of GST, which was to be done by a chartered accountant, but now it is self-certified. Filing of GSTR 9 is prerequisite. So once 9 is filed, thereafter 9C will be available to file since the amounts flow from 9. Reconciliation with respect to books and GSTR 9 is to be provided. So whatever figures you fill in GSTR 9 is very important. Those figures go in 9. Thereafter, you have to give a reconciliation with respect to the amounts available from books. Now, if you are supposed to file only 9 and whatever workings you are doing, you have to keep it in your office waiting for the notice. Then only you can produce those and give the explanation. And if you don't get a notice, you are very lucky. However, if you are filing 9C, you have an opportunity to add those supportings in GSTR 9C to support your decisions you have taken and to support the figures you have filled. General penalty clause shall be applicable in case of non-compliance. So this is a table I have prepared to show the correlation of what amounts from where will flow to GSTR 9C. I will advise you that have an Excel. Prepare a dummy GSTR 9. जैसा अपना PDF फॉर्म है, पोर्टल पे फॉर्म है ना, वैसा ही एक एक्सेल बनाओ. जहां जहां पे वो फॉर्मूलाज है उसका लिंकेज दो. और यहाँ से आप जो पता, when you know that this table 5n plus 10 minus 9 will go to minus 11 will go to 5q, and you have that PNL figure, वो reconciliation पहले करके रखो. Thereafter you file your 9 so that 9C will be a cakewalk for you. Otherwise you will once it is filed you cannot do anything. वहां पे जो figure है आपको जो reconciliation बनाया हुआ है ना उसका additional reconciliation बनाना पड़ेगा. So please take care of these figures. Once you always have an Excel ready of a dummy GSTR 9 or draft GSTR 9 कि कौन से टेबल में कौन सा फिगर डालना है, वहां से वो 9C में जाएगा. प्लीज यूज एक्सेल and you put that figure in 9C, prepare a 9C draft also, and then you prepare a reconciliation with books, and then you fill the forms. For additional disclosure, as I mentioned, I'm just sharing a draft with you, which you can prepare. Like this, you can have a notes attached, additional supporting to 9C, that what decisions you have taken or on what basis you have arrived at the figures. You can even attach the additional reconciliation for table 8. जहां जहां मैंने बोला टेबल 8D में डिफरेंस आ रहा है, तो भले आने दो, उसका आप उसको रिकंसिलिएशन बना के इसमें अटैच कर सकते हो wherever 9C is applicable. So table 6, I have followed that instruction, so I have mentioned here that the ITC pertaining to previous financial year are not reported in this table. Hence, there is a difference seen in table 6J, which is equivalent to the ITC pertaining to previous financial year claimed in 3B of current financial year. So I am giving a precise working or explanation of all the figures I have filed in GSTR 9. So these are my views, may be correct, may be wrong, and may be acceptable to you, not acceptable to you. But if my understanding I have conveyed it, you can just adopt it. And it's like a Rubik cube designed for symmetry, yet every twist reveals new complexities. The challenge lies not just in solving it, but keeping it balanced. I think the balance part is more important. So thank you. Thank you for patiently listening.
Thank you, Nidhi, madam. It was truly very comprehensive and very interesting presentation you have just presented. It was really interesting, and we are having very, short time, but so I think most of the queries you have taken, right, in between.
Yes, yes.
Yes, whatever was
Yeah.
available, I don't think I have missed any. In case there is
Yeah.
anyone want to ask, I can just read.
We are having shortage of time, so I would like to request Kavit Bhai to have a word of thanks. Yeah.
Nidhi Kakkar has given a very nice presentation here. Even the practical aspects she has covered is thoroughly. And I don't think so anyone is having any queries. And if there is any query, please ask in our MCTC indirect text group. She will give the answers to each and every queries there. And from the bottom of my heart, on behalf of MCTC, thank you, Nidhi, for giving this elaborate presentation with practical aspects. Thank you.
Thank you.
Thank you so much.
Thank you, sir.
And if possible, at last, if there is any time, if time is left, we would like to, if you are available, then we can have some queries if possible. So I would like to thank you so much, Nidhi.
Thank you.
Yeah. We would like to invite our next speaker, Aditya ji.
Hello,
Yeah. Yeah. Hi.
am I
How are
audible
you, sir?
or visible?
Yes.
Okay.
Hello, sir.
Hello,
One second. I will just.
Hello, sir.
Yeah. So I will just.
everyone. Good morning.
Good morning, sir.
Oh, sorry. One. All right.
Yeah. We do have our MCTC background. If you, we can share with
Of
you
course,
if you want
please
to.
share it with me. I will
Yeah.
read it.
Yeah. So I would like to invite Mohit for formal introduction of Aditya ji.
Yes.
Yeah, Mohit, we can take it.
Yes. Hello, everyone. Dil tham ke बैठिए. There is another lecture waiting for us, and it is again a dilemma like GST annual returns. So Aditya Surte sir is going to speak about GST amnesty scheme and recent amendments. CA Aditya Surte sir is a practicing chartered accountant with expertise in GST advisory, litigation, audit, and compliance. He also holds an LLB degree. With a strong passion for sharing knowledge, Surte sir is frequent speaker at seminars and training sessions organized by various professional and trade organizations. He also serves as a visiting faculty at the Management Development Program at Wellington Institute. He has been recognized for his exceptional skills and also received a Best Speaker at Study Circle meeting of 2023 from the GST and Best Upcoming Speaker 2016 award from the All India Federation of Tax Practitioners. Additionally, he was honored as Best Paper Writer award for his technical paper at the 42 RRC at GST. Surte sir is a regular contributor to professional journals with several publications on GST, including topics like impact on charitable and religious trust and key rulings under indirect tax laws. So outside his professional work, Surti sir is also passionate about his light, semi-classical and classical music. So with such a brief introduction, I would like to invite Surti sir to please take over this lecture.
Thank you so much, Mohit. Just give me 1 minute. Yes. All right.
Yeah, this is looking great.
Thank you so much.
At the outset, I welcome everyone. I start by congratulating everyone for sparing your time on Sunday, and I appreciate the chamber as well as all the members for being keen on sharing and absorbing knowledge. Before I start, I would like to thank the president, Mr. Jaideep Sonpal, the convener, Jitubai Fulia, as well as Reena Khakar, for considering my name and inviting me to speak at this virtual study circle meeting. I am well aware that the Malad Chamber is full of learned members. I am a proud member of MCTC myself. So despite that, you have invited me. So that's an honor. Thank you so much. Before I start, I would definitely like to take a moment to appreciate the efforts or the initiatives that I am seeing as a member of the Malad Chamber, especially by this young president and the previous young president as well. And I must congratulate you that the efforts that you are taking to get the chamber technology compliant, bringing in more technology like the flip book that you have brought in for the bulletin, as well as these virtual study circle meetings, as well as the enhancement in aesthetics. Even the flyers are, those who have an eye for it can definitely see the difference. So I wish to congratulate all of you, the entire team, and I wish to wish you all the best for the future as well.
Thank you so much.
So before coming to the subject proper, I will just share my screen and we'll start. Visible to all?
Yes.
All right. Okay. So before I start the presentation, a couple of things. One is that a few days ago, we had a full day workshop on the recent amendments under GST and other subjects at the Bombay Chartered Accountants Society, wherein Mr. Sunil Gabawala spoke on the Amnesty Scheme as well as amendments. So the presentation was so nice that the basic structure of the presentation I have built based on what he had presented. And of course, I've added whatever I felt was necessary. So credit given where due. That is one part. Second part is that the presentation, the focus of the presentation is going to be on the practical aspects that the members face. I will not be, because if you go to look at recent amendments, there is going to be under GST, there is a whole gamut of coverage that has to be done, notifications, circulars, advisories, and then judgments as well. So I think there are certain topics which require their own deliberation. In a span of 1.5 or 2 hours, it is impossible for any speaker to cover. So instead of trying to cover everything and not giving anything at the end of it. The idea is to pick certain important aspects of it and deliver on those so that we add value to the members' day-to-day practice. The entire purpose being that they need to be updated with what immediate changes are required to be made. So I will definitely not be talking about any judgments, most certainly not about safari retreats. I am sure all of us have had enough. We were planning a vacation for Christmas, and my wife said to me, "Why don't we plan a jungle safari? It will be a nice retreat." And I said, "Maaf karo yaar, छुट्टी में तो छोड़ दो safari retreat." So we will definitely not be talking about safari retreats today. Another problem here is when we say recent in GST, what should we define as recent? How recent? So because notifications are coming every day, circulars are coming day by day, advisories keep coming. So we have to always set a period that we will consider as recent for the purposes of moving ahead with the session. All right. Is it moving ahead? The presentation has moved ahead, sir? Yeah.
Yes.
Okay, I thought there was some problem. Okay, so the amendments that I have selected are from July to November. The idea was that the Finance number 2 Act, which was presented after this new government was elected at the center. So through that, certain amendments were made in GST. And then taking that as the basis of this whole presentation, we would go ahead and discuss about those. So when I saw it from July to November, it's a span of 5 months, but we've had 41 amendments relating to GST in the Finance number 2 Act. There were 2 GST Council meetings. The latest one was in September. Now we are awaiting the 55th one in December. So there are a lot of recommendations that were made. There were 19 central tax notifications. I'm only counting the central tax notifications, not counting the UT or the integrated tax notifications or the state notifications. 9 rate notifications, including 1 corrigendum. 17 CBIC circulars, including 1 corrigendum. And 51 GST and advisories. So within a span of 5 months, we have this much to cover, and we keep wondering whether this GST, the truck of GST, which is going downhill so fast, whether it is ever going to stop, whether the amendments will ever stop. If you ask me, unfortunately, right now, it doesn't seem that it will stop anytime soon. So we start with the Finance Act. I am not covering all the provisions here, of course, but the highlighted ones, I have covered them separately. So we will concentrate on these and then we will move forward as well. So I'm sure all of us are aware of, or at least have read somewhere about these amendments. These had come in July. So Section 9 was amended to state that ENA or rectified spirit is also excluded from the levy of GST. We are all aware why this was done. Alcoholic liquor for human consumption is out of the purview of GST. ENA is required for manufacturing alcoholic liquor for human consumption. So on the input side, there was GST. There was the cost was increasing. Therefore, this was also taken out of the purview of GST. 11A, the provision that has been made, one of the most celebrated provisions. However, nothing has happened in terms of this. This is a provision which gives power to the central government to issue a notification to regularize any non-levy or short levy of tax for the past periods based on industry practice. So we have seen many such examples that have taken place in GST. If I were to give an example, one is of ice cream manufacturers or ice cream sellers, where many of them were charging tax as if they were restaurants. eventually the council had clarified that over-the-counter sale of ice cream is not a supply of restaurant service. It is sale of goods liable to tax at 18%. Thereafter, they had also, in the subsequent council meeting, also clarified that all of those, in order to avoid litigation, all of those who have charged 5% GST up to the date of clarification, we are regularizing on as is various basis. So this as is various basis has come quite often in the last 5 years. If we see the circulars, that circular I'm not discussing today, but if we see the recent circulars, they have issued a separate circular to clarify the scope of what they mean by as is various basis. Okay, and they give reference to the Transfer of Property Act also to say that, you know, as is basis or as is various basis has been is generally meant where you are transferring a property on as is various basis. So they have tried to elaborate the scope. There is likely to be a lot of litigation with respect to that circular also. But nobody has been complaining with this as is various basis till now, probably because what they are doing through these as is various circulars is that they are offering relief to a majority of the sector. So this 11A is an enabling provision. It gives power in the act. There will be a notification now, no more circulars. No notification has come till now. Then we come to section 13, time of supply for reverse charge from unregistered suppliers. I'm discussing this separately. 16.5, 16.6, 16.5 introduced for allowing people who had missed out on the 16.4 timeline for financial years up to 2021 to claim that ITC as a one-time mini amnesty, if you were to call it. 16.6 also a very good provision for those whose registrations were cancelled and they miss out on their 16.4 timeline. We will discuss these separately. 31.3 is connected with section 13. We are discussing it separately as to the timelines of issuance of self-invoice in case of RCM from unregistered suppliers. Section 39 talks about mandatory filing of TDS returns. Earlier, those people who are not required to pay TDS in a month were not required to mandatorily file their return. Now, they've also, GSTN has also recently issued an advisory relating to sequential filing of GSTR 7 returns. 54 talks about no refund for goods which are subjected to export duty or denial in case of drawback claim has been removed. Section 70 enabling authorized representatives to appear in case of summons, so that I think subsection 1A has been introduced to allow the authorized representatives or advocates or chartered accountants or tax practitioners to appear as authorized representatives on behalf of taxpayers. We are not going to debate today on this issue, but it remains to be seen how useful or dangerous this new provision is. Then we come to 74A. Instead of 73 and 74 adjudication and demand and recovery proceedings, we have this consolidated adjudication provisions with effect from financial year 24-25 onwards. We have a separate section on it as well. If we are short on time, we can quickly go through this and skip through this, because please remember that we are currently facing adjudication proceedings. The 2021 timeline is just over. So this provision will be applicable to us only from 24-25 adjudication for 24-25, which is likely to come in 26 or 27. So we can always have a separate session on it. But I thought that since this is a new provision, everyone should at least be introduced to it. Next, in section 107, at the first appellate stage level, they have reduced the maximum pre-deposit amount. So we have 10%, and then there is a maximum cap that was put. I think it was around 50 crores. Now it has been reduced to 25 or something like that. So there is a provision made to reduce the maximum pre-deposit amount that a person is required to pay as a taxpayer-friendly measure. Next, at the second appellate level, that is the appellate tribunal level, we had the provision of 20% pre-deposit. That has been reduced to 10% now. So 10% at the first appellate level, 10% at the appellate tribunal level, whenever the tribunal comes. Next, one of the most important sections for which we are here today, the first part, the amnesty for past dues. 171 talks about sunset clause for anti-profiteering, and then there were certain amendments made to the Schedule 3 and Section 16 of the IGST Act. Now, the agenda for today, if we are able to cover everything, and that will be my attempt. First, we go through the amnesty scheme under section 128A. Second, allowance for delayed claim of ITC under 16.5 and 16.6. Third part, RCM on unregistered inward supplies. Fourth, RCM and TDS relating to purchase of metal scrap. Fifth, new adjudication procedure under 74A. Sixth is introduction to invoice management system or IMS. And the last part will be selected circulars, notification and advisory. We start with the first part, amnesty scheme. Now, amnesty scheme, they have not referred to it as amnesty scheme. We are calling it as an amnesty scheme. The government also unofficially is calling it as an amnesty scheme. But the section reads waiver of interest or penalty or both relating to demands raised under section 73 for certain tax periods. The title of the section itself gives us an idea as to the scope of this waiver and the restrictions that are being put. So it is only relating to waiver of interest or penalty or both. No reduction in terms of tax. Second, it only relates to waiver of interest or penalty or both where the demands have been raised under section 73, not under 74. Please bear in mind for these periods, 74A does not come into picture at all. And it only relates to certain tax periods. If anyone is interested, before anyone puts up a question in the chat box, please let me say that I will be sharing this presentation in its entirety with the managing committee. So you will all get this presentation. So there are certain slides I've put as a reference material for those who want to study this further. The reference material that I have taken to study the amnesty scheme, there are two press releases. One which was issued after the 53rd Council meeting, which announced this particular amnesty scheme. Next, there was a press release, which was an announcement of procedure and conditions for the amnesty scheme, which was released after the next GST Council meeting. Then there is your section 128A of the CGST Act. Rule 164 of CGST rules that was inserted later. Forms SPL 1 to SPL 7 that have been also made part of the rules. Notification number 21 of 2024, which is notifying the date of payment of the amount of the tax for being eligible for amnesty. And then there is this CBIC circular number 238 dated 15th of October, which has been issued to clarify certain aspects and also gives a sort of FAQs. Now, this circular is a 15-page document. Like all other circulars, like we saw, there are specific numbers of circulars. Each circular which is clarifying, it's a one-page circular, one-line circular title, which says clarification with respect to certain services. And then it clarifies aspects relating to 8 services. So similarly, this circular also has 15 pages clarifying different aspects. The intention of today's meeting and this presentation is that I have gone through all the material, combined everything so that this could be, I will not go to the step of saying that this will be, but this could be your sole reference material for referring to any provisions of amnesty tomorrow. This is the overview of the amnesty scheme. The tax period that is covered by the amnesty is financial year 17-18, that is from 1st July 2017, when GST came in, up to financial year 2019-20. So only for the periods of financial year 17-18 to 19-20, any demands that have been raised, you can go in for amnesty. Any demand relating to 2021 onwards, irrespective of when it has been raised, you cannot opt for amnesty. Similarly, for this period, irrespective of when the demand has been raised, you can go in for amnesty. Next important part is that there is no amnesty without any show cause notice or an order from the department. So if you read the language of 128A, it is very clear that unless there is some document issued and that document is very specific, that a show cause notice or an order from the department, you cannot opt for amnesty. So your ADT 02, when audit has been conducted under section 65, that ADT2, although commonly it is referred to by a lot of people as audit ka order hai, that is not technically an order. That is not even a show cause notice. That is only an audit report. After ADT2, if the taxpayer does not agree, then the audit team, generally in central GST, audit team issues a show cause notice, either under section 73 or 74, which is later on adjudicated by your adjudicating jurisdictional authority. In state GST department, generally the same person who is conducting the audit also issues the show cause notice, also adjudicates the matter. So your ADT2 is not a notice. If you have been issued an ADT2, you cannot opt for amnesty. Now, a lot of people will say that, okay, then one part of it is that we have to ask the officer to issue a notice and we will go in for amnesty. So please bear in mind the timeline of when this amnesty has come. Okay, those people who have in anticipation that an announcement was made and an amnesty is coming and something like this will come, before this was notified and financial year 1920 timeline had passed, whoever has gotten notices issued, very good. For those people who have still not received notices, there is no need for you to worry about notices, because a 73 notice for financial year 1920 cannot be issued. For that matter, now 2021 also cannot be issued now. It is time barred. So if you are in a situation which says that, oh, I had only received an audit report, but a show cause notice was never issued to me, can I opt for an amnesty? Or there are dues which I know that I have identified, but there was no scrutiny, no adjudication, and unfortunately I had not paid off. You want to pay them off, by all means. You should never deprive the department or the government of its rightful taxes. However, if you ask me the question, can the department ask from you under section 74? Yes, they can. They still have the timeline to issue the notice. If they issue a notice to you under section 74, any which way you are not eligible for amnesty. But they cannot issue a notice under 73, so there is no question of amnesty. Next, we move to the next aspect. Full tax as per show cause notice or order is required to be paid on or before the notified date. We are covering all these aspects in the subsequent slides. But one point you need to bear in mind and note down, that there is no partial amnesty. Whatever tax has been demanded by way of the show cause notice or the order must be paid in full, and that too before the notified date, which is notified as 31st March 2025, to be eligible for amnesty. Next, application for amnesty has to be filed on or before 30th of June. So what the rules state is that within 3 months from the notified date, which is 31st March 2025, you have to file the application. So the process is, which I'm covering in a separate slide, that you pay the taxes before 31st March, and thereafter on or before 30th of June, you file the application in either SPL 01 or SPL 02. If I'm not mistaken, GSTN has also issued an advisory stating that the forms are not ready on the portal yet. So we are advising all of you that they are likely to be ready by January, but we are advising all of you that you please pay your taxes on or before 31st March, either using DRC 03 or by crediting to the credit ledger or by using 3A, which we are also covering in the subsequent slide. And thereafter, we will come up with the form and you will be able to file those forms within the due date. Next part, once you are eligible for amnesty, what do you get? You get full waiver of the interest as well as penalty, and the conclusion, the proceedings will be deemed to be concluded for that particular adjudication. Any pending appeal and or writ petition that you have filed against the demand must be withdrawn, which is the case with every amnesty that we have seen. There was a doubt as to whether if somebody has filed a special leave petition in the Supreme Court, what does that person do? Is that person required to withdraw it as well? So the circular has clarified this aspect, saying that although they have only stated appeal or writ petition, it is intended to cover even a special leave petition. So you are required to even withdraw a special leave petition, and the proof of withdrawal, the order of withdrawal, or if you're not, you don't have your hands on the withdrawal order, at least the application which is acknowledged by the authority that you have withdrawn the appeal or writ petition or SLP has to be uploaded along with the application. In case the demand is for recovery of an erroneous refund, the amnesty is not applicable at all. You are not eligible for amnesty for recovery of erroneous refund. No waiver of interest or penalties available to you. There is also no refund of interest or penalty that you may have already paid. So all of those people who have already paid any amount of interest or penalty against the demands that were raised under Section 73 for these periods, this amnesty, again, like all amnesties, if you have paid, you don't get any benefit. If you have been non-compliant and you have litigated or you have litigated, then you are eligible for this particular amnesty. Let's go into the specifics of Section 128(1). So 128(1) covers three scenarios, A, B, and C, which have been tabulated over here for your convenience. Let's understand them one by one. 128(a)(1), subsection 1, clause A covers a situation where a show cause notice under Section 73(1) or a statement. We are all aware that 73(1) says that a show cause notice will be issued. 73(3) says that where a show cause notice has already been issued for another period and the issue is the same, the officer can simply issue a statement under 73(3) for another period, and that will be deemed to be a notice. So that is what they mean by a statement. So we will refer to both of them as show cause notice itself. So show cause notice has been issued, but an order under 73(9) has not been issued. So in these cases, the rules state that you make the payment on or before 31st of March. Now, what will you pay? You will pay the entire amount of tax as per the show cause notice if you want to opt for the amnesty. You pay the entire amount of tax on or before 31st March 25 through Form DRC-03. Thereafter, you will file Form SPL-01 on or before 30th June 2025 to be eligible for amnesty. Clause B covers a situation where a show cause notice was issued, adjudication took place, an order was passed under 73(9), but an order under 107(11) or 108(1) has not been passed. That is the first appellate order or revisional authority's order has not been passed. Basically saying that where adjudication is over and thereafter you have either gone in appeal and the first appellate authority has not passed any order, or adjudication is over, a revisional authority has undertaken revisional proceedings, but an order has not been passed, or you have not filed an appeal at all, and nothing has happened till now, even then you are eligible. So one question that always comes, which I've covered in the FAQs, that the order was passed, I did not file an appeal, the timeline is also over, and for whatever reason, recovery has not yet happened. Can I go under this amnesty and pay off the dues and will my interest and penalty be waived? The answer is yes. Because the language of 128(a)(1)(b) states that the order has been passed, but order under 107(11) has not been passed. So you're also covered. Correct? So in this particular case, they say that you pay the amount on or before 31st March 2025. But now since an order has already been passed, a demand has been created in the electronic liability register. So against that debit, you make payment by way of crediting the electronic liability register so that they can track that against this demand, this tax payment has been made. If you have inadvertently or already, or because you did not know, you have made payment by way of DRC-03, you have not paid by crediting to electronic liability register, please bear in mind there is a specific procedure. One of the circulars which has been issued when this DRC-3A form was issued also specifically covers what you have to do. You have to go to that system, go to the ledgers, and wherever the demand is created, and you go there and you click again on that demand and then you make the payment. So if you have not done this and you have made payment by way of DRC-03, which is not linked to that particular demand, then they say that you file this DRC 3A form, which has been again recently introduced. This 3A form is nothing but a form to link any payment made in DRC 3 to a specific demand. So you file your DRC 3A in that case on or before 31st March and link it to that demand. Thereafter, you file the amnesty application form applicable to you is SPL 02. You file this form on or before 30th June 2025. Third part, your first appellate authority has also passed an order, or I'm sorry, that subclause Q, that's a typing mistake. So the gist of it is that either your appellate authority or your revisional authority has also passed an order, but no order has been passed under 113. That is the tribunal level, which in 100% of cases, tribunal, since it has not been formed, nobody has passed an order. So where your first appellate authority has passed an order, but second appeal is pending, no order has been passed, you can still opt in to go in for amnesty. You pay the tax as per the first appellate authority or revisional authority's order by crediting to your electronic liability register, or if you have paid through DRC 3 by filing 3A on or before 31st March 25, you file SPL 2 on or before 30th June. Now, there are two provisos which are covering specific situations. First one talks about where a show cause notice was initially issued under section 74, but later on it is held to be a proceeding under section 73. Most of you will be aware that there is a provision under section 75 wherein if a notice under section 74 is issued, at the appellate stage, you can contest that there was no element of fraud or suppression or willful misstatement that was involved. And if the appellate authority agrees with your contention, then provided the show cause notice was issued within the time limit of 73, those proceedings will be converted into section 73. The proceedings will not be invalidated. They will continue under 73. So any such situation, which we have seen that when the timeline approaches and the matters are time barred for 1920, for even for 1718, the department has tried to issue show cause notices under 74 now. Even for 2021, we will be seeing that. So although 2021 is not applicable for amnesty. So for 1718 to 1920, wherever such a situation has come up, please bear in mind at the adjudication level, it is not going to get converted into 73. So if you decide to contest it, and at the appellate level, the appellate authority agrees that there was no element of fraud, and the proceedings do get converted into 73, provided the notice under 74 was issued within the timeline of 73. So that proceeding gets validated under 73, you can still go in for amnesty, pay the entire amount of tax, and your entire interest and penalty will be waived. The timeline for this, of course, they know that these things are not going to get over by 31st of March. So the timeline is that whenever such an order is passed, you will get 6 months from the date of order to make the payment of the entire amount of tax. If you are at the show cause notice level, you will file SPL 1. If you are at the order level, you will file SPL 2. And within 6 months from the date of the order, you will have to file this application form and you will be eligible for amnesty. Please bear in mind, in all the other cases, we are getting 3 months from the date of payment to file an amnesty application. However, in this particular case, whenever such an order converting proceedings from 74 to 73 are passed, within 6 months, we are also required to make the payment as well as file the application. The second proviso deals with a situation where the department has gone in appeal or revisionary proceedings have been initiated. Please bear in mind, if you are opting for amnesty, it is incumbent upon you to withdraw your appeal and then opt for amnesty. The department is not mandated to withdraw their appeal. So if the department has filed an appeal, the appeal will continue. And the condition is that your eligibility for amnesty is only finalized in such cases where the appellate proceedings result in an additional liability over and above the order. Then you must make payment of the tax as per the additional demand within 3 months from the date of such order. If you don't make such payment of tax within 3 months from the date of order, as and when it is passed, then your benefit that you have taken under this amnesty, it will be ineligible to you and they will proceed with recovery of interest and penalty. I hope I've made this point clear. Now we move on to the next aspect. We have certain combo deals where this should sort out many questions that are commonly asked again for amnesty. That where my show cause notice or an order covers multiple issues. So we have seen that amnesty is not applicable in case of recovery of erroneous refund. What if my show cause notice of or order covers multiple issues and one of the issues is erroneous refund? There is also 3B versus 2A. There is also other aspects that are there. NGTP hai, baki hai, whatever it is. So one of the issues is erroneous refund. So rule 164 sub rule 3 is covering this aspect. Second part, where my show cause notice or order covers multiple financial years, especially in case of CGST authorities. This situation is very common, that they have conducted an audit for 5 years block and they have passed an order from 17-18 to 21-22. Now what do we do? Because the amnesty only covers periods from 17-18 to 19-20. So in that case, am I eligible for amnesty? What happens? Rule 164 sub rule 4 covers this. And the last part is where there are multiple issues in my show cause notice or order, one of which is 16.4. Because they have also come up with 16.5 and 16.6, what happens? We'll cover all three situations. The first one, where your show cause notice or order covers multiple issues, including erroneous refund. They say that you pay the full tax as per the show cause notice or order, including the tax relating to recovery of erroneous refund on or before 31st March 2025. Then you file an application in SPL 01 or SPL 2, whichever is applicable to you. Post your application, the officer will scrutinize the application. He will waive the interest and penalty for the eligible matters other than erroneous refund, and he will demand the interest and penalty for ineligible matters, that is the erroneous refund. So I hope I have made myself clear. Once you pay the full tax, including the tax relating to recovery of erroneous refund, the officer will waive your interest and penalty relating to all the eligible matters and demand in that same order, he'll issue a demand for interest and penalty on the erroneous refund. You will have to pay the interest and penalty relating to erroneous refund within 3 months of the officer passing that order, either in SPL 5 or SPL 6. If you do not pay this interest and penalty relating to erroneous refund, then it will result in loss of amnesty for eligible period or eligible issues also. Correct? So I hope I have made myself clear. You pay the full tax, you file the application. Thereafter, after passing of that amnesty or acceptance order, you will have to pay the interest and penalty on the erroneous refund or in the ineligible issues within 3 months. If you don't, then even your eligible issues ka amnesty goes away. Second part, where it covers multiple financial years. If my show cause notice or order is covering 17-18 to 21-22, they say you pay the full tax. Same procedure. You pay the full tax as per show cause notice or order by 31st March. You file an application. Officer will give you waiver of interest and penalty for the eligible period from 17-18 to 19-20. He will demand interest and penalty from you for the ineligible period. You will pay the interest and penalty for the ineligible period within 3 months. If you don't pay, you will lose the amnesty for the eligible period as well. So in both cases, you will find that the entire tax, there is no chance to pick and choose issues or financial years from the combined notice. If you have orders or notices for separate periods, you are lucky. If there is a consolidated order or show cause notice, there is nothing you can do as per the current provisions of the amnesty. Of course, there are several high court rulings which have come, which state that an order or a show cause notice covering multiple financial years is illegal. So you need to explore if you want to fight on those grounds. However, if you are asking me from the perspective of the current amnesty scheme, then the procedure of amnesty is clear. You pay the full tax. The only relief that you get is if your show cause notice or order covers multiple issues, including the denial of ITC under 16.4. Then because there is a specific provision under 16.5 that has been made available with retrospective effect from 1st of July, they say that since we are already granting you waiver, if you have filed your return on or before 30th of November 2021, and you are eligible for that 16.5 waiver, then you reduce that much amount from your order or show cause notice, and you only pay the balance tax, and you file your application. The officer will verify the application and pass the necessary order. So you don't have to pay the entire tax and get a refund from the department. You can reduce that much tax under 16.4 reversal and file the application. You will, of course, you are going to get the waiver of interest and penalty. Now, we come to the process of amnesty. If you read Rule 164, now when we had gone through at the beginning, when we said I said that we had discussed this at BCS, I went through sir's presentation also. This is one part where I felt that, you know, people going through the rules, you will not, it is very difficult to understand the process. They've made it so complicated. So this chart I've tried to prepare to the best of my ability that will give you the entire idea of what is happening. So first, you determine whether you are eligible for amnesty or not. Once you have determined and you think that you are eligible, you pay the tax in full as per the show cause notice or the order. If you have filed an appeal, you withdraw the appeal and you pay the tax on or before 31st March 25. Then on or before 30th of June 2025, you file an application in SPL 1 or SPL 2. There are two possibilities. First, the officer accepts your application and passes an order of acceptance in form SPL 5 within 3 months. Please bear in mind, the rules have put specific timelines for passing these orders, and the rules also very clearly state that wherever they have put timelines, if the officer does not take any action, then it will be deemed approval in all such cases. So where the officer does not pass any order of acceptance or does not take any action, then it will be deemed that your amnesty application has been accepted. Second option that the officer has is that he can issue a notice for rejection of your amnesty application. So this will be a show cause notice as to why I should not reject your application for amnesty. This also has to be issued within 3 months. From within 1 month from the issuance of this notice for rejection, you, the taxpayer or the applicant, will have to file a reply to this show cause notice within 1 month. After you have filed your reply to the notice for rejection, the officer gets another 3 months either to accept your reply and pass an order in SPL 05 within 3 months, or he says that I do not find your the explanation given by you satisfactory, and therefore I am rejecting your application for amnesty, and he will pass an order in SPL 7 within 3 months. Once he has rejected your application, you have two choices. Again, either you pay the interest and penalty as per the order because you are not eligible for amnesty, or you file an appeal in against the order of rejection of amnesty in APL 01. अभी ये APL 01 अपना regular appeal है, correct? That we file. So the timeline that is applicable under 107 is 3 months plus 1 month of condonation of delay. So you go in appeal against the order of rejection of your application. Please bear in mind, in this appeal, your scope of argument is only going to be on whether the authority who has rejected your application for amnesty, whether he was correct in rejecting the application or not. You will not be contesting the merits of the case in this matter. You will only be in appeal for the rejection and getting the application restored. So where the appellate authority finds that yes, you have a good point and he accepts your appeal and he allows your appeal, then he will pass an order in SPL 06 allowing the amnesty to you. If he says no, I will reject your appeal, then he will pass an order in APL 04. What happens in case where your application for amnesty gets rejected and you do not pursue an appellate remedy against the order of rejection, or where the appellate authority who rejects your application who rejects your appeal against the rejection order of amnesty, he rejects your appeal and he passes an appeal rejection order. In both these cases, if you had originally filed an appeal which you had withdrawn for going in for amnesty, the rules say that your original appeal will get restored. So that is one good part, is that if you have filed an appeal and you had opted for amnesty by withdrawing the appeal, and for whatever reason your amnesty application gets rejected, and even in appeal it gets rejected, your original application, your original appeal that you had withdrawn gets restored. Please bear in mind, if you had not filed an appeal, then there is no remedy. Please also bear in mind that against this order of rejection, you do have a remedy of filing an appeal. But again, that appeal will only be on the limited scope of rejection of amnesty application, not on the merits of the case. I hope I have been able to summarize the process of amnesty, because when I read the rules, this was my reaction, that the complications made in the amnesty procedure are so much that it will be required, I am pretty certain, that the officers will be required to be trained in terms of how to implement this amnesty scheme as well. The last part, in the amnesty part, we go through some FAQs. First FAQ, I think I've already covered. Order passed under 73(9), but I had not filed an appeal. My adjudication order was passed. I did not file an appeal. My 3 months are over. For whatever reason, my recovery has not been initiated. Am I eligible for amnesty? Yes, you are covered by 128A 1B, as I already discussed. Second question that comes up is, show cause notice was issued only for interest and penalty. So what I had done was, I had already paid the tax through DRC3 at whatever stage, at the audit stage or whatever. But I had not paid the interest. So if you read the provisions of section 73, they are very clear that only when you make the payment of tax before issuance of show cause notice, if you make the payment of tax along with the interest in full, then there will be no show cause notice and the proceedings will be deemed to be concluded. But if you only pay the tax, then the officer is very well entitled to issue a notice for interest as well as penalty. So in such cases, the FAQs and the circular also state that you will not required to pay any additional tax because you've already paid the tax. You will be eligible for full waiver of interest and penalty. You will, of course, have to file an application in SPL 1 or SPL 2, whatever it is. In this case, show cause notice has been issued, so only SPL 1 you will file. However, those FAQs also state that interest on delayed filing of GSTR 3B will not be waived, since it is a self-assessed liability. Please bear in mind, this is a little bit of a controversial issue. The circular is saying that if you had made a delay in filing your GSTR 3B, thereby the department is of the view that there is an interest liability payable. Although the tax declared in GSTR 3B is self-assessed tax, we all are aware under 75 subsection 12, the department can very well recover such tax under 79. Now, this situation never arises that you declare something in 3B but you do not pay, because you have to pay the tax in full. There is another situation which gets covered in this, that if you have declared a tax in GSTR 1 but you did not pay in GSTR 3B, by an amendment to section 75 subsection 12, they have stated that such tax which is declared in 1 but not covered by 3B, which you have not paid basically through 3B, is also considered to be self-assessed tax, and that can also be recovered. But in both these scenarios, the department does issue a show cause notice. primarily because there have been certain High Court judgments which have stated that although the interest is automatic, the calculation of interest may be disputed by the taxpayer. So you need to give the taxpayer an opportunity to present. Therefore, they do issue a notice. So, in case a situation arises where I had filed the 3B late, I had not paid the interest, or I had paid short interest, and there is a show cause notice issued to me for payment of interest. The circular says that you are not eligible to get that interest waived because that interest is on a self-assessed liability. And although a Section 73 notice was issued to you, we will not cover this by an amnesty. It is not intended. Now, how many people are going to go and still object to it? Because the language of 128A is very clear that a show cause notice under 73 is issued. Nowhere is it saying that you are excluded. The circular is excluding you. How far the circular is binding upon us, we are all aware. The circular is not binding on the taxpayer. Of course, when you file the application, the circular is very much binding on the departmental authority. He is going to reject your application. You will have to go in appeal, and all of the proceedings will follow. One more issue I want to cover here is that situation where you have declared a tax in GSTR1, but not declared it in 3B. Now, if you go by the intention or of the clarification issued in the circular, then such liability also being a self-assessed liability, if a notice is issued to you under 73 for liability difference between 1 and 3B, then you should not be eligible for that also. However, if you read what is being written in the circular, they are only covering this one particular scenario of interest on delayed filing of 3B. They are not categorically excluding the difference between 1 and 3B liability. So I'm sure the amnesty period has just started. We will have soon further clarifications depending on representations, and in the near future, this issue will also get covered. Third aspect is, I have already paid the taxes. I had not paid the interest, of course, no penalty. The show cause notice was issued to me in which the tax has been demanded and appropriation of the taxes already paid have been sought. And this show cause notice is either pending at adjudication level or an order has been passed and it is pending at appellate stage. Am I eligible for amnesty? The answer is yes. You need not pay any additional tax because you already paid the taxes which were sought to be appropriated in the show cause notice. You will get full waiver of interest and penalty. We have also seen this most commonly asked question, whether partial waiver of tax or partial in terms of some issues or in terms of some financial years is eligible. It is not permitted. You have to pay the tax in full as per the show cause notice or the order. Whether the amnesty covers late fees or redemption fines, such are not covered. It is only an amnesty for waiver of interest and penalty. One peculiar situation, which a lot of people may not come across, but some of you will. Any tax. So we have seen, I will give an example and explain this. In audit, I have faced this situation also. In audit, the tax authorities came. The pet issue of the tax authorities was cross-charge for a long time. So they used to say that you have not paid the tax in cross-charge. Now, many of us, instead of fighting with them on the legality of whether cross-charge is applicable or not, took the shelter of the second proviso to Rule 28, discharged the liability, claimed the ITC at the recipient end, and showed them that, see, we have discharged the liability. Of course, the liability that we discharged was never satisfactory for the officers because they demanded the liability in crores. We taking shelter, of course, of which was a legally valid, which was subsequently clarified by the circular also, that whatever value you demand, you put on the invoice shall be deemed to be the open market value. So we paid the taxes in lakhs. The officer completely disregarded that tax payment, covered it in his ADT2, covered it in his show cause notice. Now, these particular taxes have not been paid through DRC3 because unless you paid that tax through GSTR 3B and you uploaded that invoice in GSTR 1, there was no question of the recipient getting the credit. So you uploaded that and you paid that tax through 3B and the recipient claimed the credit of it. Now, show cause notice has been issued. Does it get covered under amnesty? Whether the interest and penalty regarding that? Now, ideally, the answer is absolutely yes, because you've already paid the taxes before 31st March. The issue is not excluded. The period is not excluded. So you are eligible. However, the only challenge that you are going to face is that when you file an application for amnesty and you tell them that this is already covered, in a DRC3, generally you have paid and you put a remark that we are paying this for this particular purpose, and that should satisfy the officer. When you have paid it through GSTR3B, we all know that GSTR3B is a summary return. It is going to be very difficult for you to prove to the officer and convince the officer that this is the liability that has been paid through GSTR3B. I have covered the part regarding amnesty. There are 5 questions. Okay, we will take the queries on GSTR 99C after the last session, of course. Interest on late filing of GSTR 1 is covered. There is no interest on late filing of GSTR 1. In case of late filing of GSTR 1, there can only be a late fee, if at all. And late fees are not covered by this amnesty. We now come to our second part, which is the extension of time limit under section 16(4) for claiming ITC in relation to financial year 17-18 to 2021. I think this was one of the most sought after provisions. It gave people so much joy that finally, after waiting for this long, we had a provision under 16(5) which covered, for genuine reasons, those people who could not file their GSTR 3Bs, and maybe for a day or maybe for a couple of months. I have seen people who had just delayed their GSTR 3B by 1 day and they had received notices of crores of rupees. So all these genuine circumstances, the officers also were aware that these are genuine situations. Majority of the officers had held on to these 16(4) demands as to what is going to happen. So this was a really welcome relief. 118 section of the Finance No. 2 Act, inserted with retrospective effect from 1st of July, put these two subsections 16(5) and 16(6). 16(5) is basically saying that your time limit for 17-18 to 2021, time limit for claiming ITC under 16(4), the outer time limit, which was basically for these years, was the due date of filing of return for the month of September after the end of the financial year. We are increasing this timeline to 30th of November 2021. So for all these years, irrespective of which financial year it relates to, if you have filed a GSTR 3B and claimed the ITC on or before 30th of November 2021, you are eligible. You have not gone out of the 16(4) timeline. You are eligible. Similarly, there was a real big problem with those people whose registrations were cancelled. And because their registrations were cancelled and they could not file the return, their 16(4) timeline passed in that period in which their registration remained cancelled. And thereafter, the cancellation was revoked. And they realized that our 16(4) timeline is passed, and there were notices for recovery of that ITC that they had claimed for those periods which, when their registrations got cancelled, were within the time limit of 16(4). But those returns for that period were filed in the subsequent period and ITC was claimed later. 16(6) basically says that we are in all these situations where your revocation got cancelled, and at the time of cancellation 16(4) timeline was there, but till the time your cancellation got revoked, that 16(4) timeline is passed, we are granting you an additional time of 30 days from the date of revocation of cancellation to claim that ITC. People were rejoiced that finally this provision is there. However, for a lot of people who had already reversed the ITC under 16(4), they have said Section 150 of the Finance Act said that we will not grant you any refund of the taxes that you have already paid or the ITC that you have already reversed. So consistently, once again, we have been seeing, unfortunately, that in GST, people who have been compliant, or rather people who have been 100% compliant, have faced very little problems. But since this is the new law, it's an admitted fact that people have been non-compliant not because of their own doing, but many a times inadvertently. But those who have remained non-compliant in the long run have benefited. Those who have decided to pay it off and move ahead are at a loss because they are not going to get any refund. Now, let's cover situations under 16.5 and 16.6. What is going to happen? Let's say that you are at a stage that you have claimed ITC beyond the time limit of 16.4 for any of these 17/18 to 2021, and no show cause notice has been issued to you till date. What happens? Please bear in mind, we are talking about no show cause notice issued. DRC 01A is a pre-show cause notice intimation. It is not a show cause notice. So where DRC 01A was issued to you for recovery of this ITC under 16.4, but a subsequent show cause notice was not issued, that situation also gets covered over here. So you are sitting here, no show cause notice issued till date. What happens now? What do I do? You do nothing, because they say that the proper officer will take cognizance of 16.5 and 16.6 before issuance of show cause notice. Correct? Next, you are in a situation where show cause notice was issued, but adjudication is still pending. No adjudication order was passed by the adjudicating authority. In that particular situation, what do? Again, you do nothing. The adjudicating authority is required to take cognizance of 16.5 and 16.6 and pass the appropriate order. A circular has been issued in this regard also, where the officers have also been given instructions that you have to take into account the provisions of 16.5, and wherever there is an ITC disallowance sought under 16.4, you take into consideration whether if the ITC has been claimed as per the extended timeline, you allow it. They have also been instructed to check whether the disallowance is actually only in terms of 16.4 or in terms of anything else. They are also been instructed to see whether even if they are eligible under 16.5, if the taxpayer is ineligible for under any other provision, then also they are required to disallow. All right. Next situation, adjudicating authority passed the order. Appeal file kar diya, but appellate authority has not issued any order. I think most of us are in this situation because we filed appeals, we paid the 10%. Otherwise, we were waiting that something will come, and your 3 months plus 4 months of 1 month of condonation, total 4 months are over. You lose your right to file an appeal also. So many of us have filed an appeal. The appeals are pending at the appellate stage. Now what do? Of course, we write to the appellate authority saying that 16.5 has come and you can now please proceed to decide our appeal. So the appellate authority will take cognizance while passing the order and pass appropriate order. Next situation, your appellate authority, first appellate authority passed an order, or revisional authority has passed an appellate authority passed an order, and revisional proceedings got initiated against that order under 108, but revisional authority has not issued any order. Again, you do nothing. The revisional authority is required to take cognizance of 16.5 and pass the appropriate order. Next is your first appellate authority passed an order, but you did not file an appeal at all. Okay? What happens in that particular case? So, mera first appellate authority, no show cause notice issued, nothing to be done. Show cause notice issued, but order not passed by adjudicating authority, nothing to be done by you. Adjudicating authority will pass the order. Appeal was filed by you. Appellate authority will take into account 16.5, 16.6 while passing the order. My adjudicating authority had passed an appeal, passed an order, but I did not file an appeal. My 3 months were passed, whatever it is. And till now, recovery has not happened. What do? So for people who are in this situation, they have brought in a special procedure for rectification, which is where you apply for rectification under the special procedure within 6 months from the date of issue of that notification, which that notification has come on 8th of October. So please bear in mind, if you are only in this one particular situation, then you have to apply for rectification. This, please take note that this also covers those situations where your first appellate authority has passed an order and you have still not filed an appeal, or because of course the appellate tribunal has not come into picture, therefore you have not filed an appeal, second appeal. In those cases also you apply for rectification of the first appellate authority's order and it will be rectified. The last part, that show cause notice was issued or order in original or order in appeal was issued, where one of the issues is 16.4 and I am contemplating going in for amnesty against that order. So there are other issues also involved. One of the issues is 16.4. In that case, you need not file a separate application, a separate application for rectification as provided above, because as we have seen under 128A, what you have to do is you have to just reduce that amount, apply for amnesty. The proper officer who is going through your amnesty application will take that into account and pass an appropriate order accepting your application, and you need not file a separate rectification application in that particular case. I hope I have explained all these situations. What is this special procedure? Let us quickly see. Now, please bear in mind once again, this special procedure is only applicable if an order is passed but no appeal was filed. One question that constantly comes is that because people are also considering this to be a sort of an amnesty, they ask, if we filed an appeal against a 16.4 order, should we withdraw an appeal and apply for this special rectification? The answer is no. If you have filed an appeal, the appellate authority has accepted your appeal, the appellate authority will pass an order considering the provisions of 16.5. There were certain situations. I have come across a specific, very peculiar situation, in which case I had filed an appeal. It was a pure matter of 1 point only of 16.4. The return was barely delayed by 3 months because the taxpayer did not have any money to file 3B. And the demand was 1 crore of rupees of ITC. I'm sorry. Yes, the demand was 1 crore. So it was impossible for the taxpayer to pay the 10% dues, but we wanted to file an appeal within the 4-month timeline and did not want to lose out on the cause of action, because at that time, no such notification or a procedure or announcement had come. So in that case, we filed an appeal by making 0 part payment of tax. Now, 2 questions get answered here. One is whether it is possible on the portal to file an application, file an appeal by paying 0 part payment. The answer is yes. The portal does allow you. However, as per the provisions of section 107, you are mandated to pay 10% in order to stop the recovery and get the appeal admitted. So it's a prerequisite. So naturally, in majority of these cases, or almost in 100% cases, the appellate authority will reject your appeal. He will never admit your appeal. So in such situations, what we have then done is, it is basically as if no appeal was ever filed. So we have, by our own, once this notification came, we have withdrawn the appeal in that particular case, after, of course, consulting with the appellate authority and the adjudicating authority, and we are filing an application for rectification. So what is this rectification application? You apply electronically on the common portal. You upload the information that is given in the proforma of Annexure 1 to this notification number 22. You can refer to that Annexure A. They have given a proforma of information what they want. You fill in that information along with the rectification application. This rectification application will be dealt with by the proper officer who had passed the original order. So if your adjudicating authority had passed an order and you had not filed an appeal, you file an application for rectification. That same proper officer, adjudicating authority, will deal with this rectification application. The proper officer will take a decision on the application and issue a rectified order as far as possible within 3 months from the date of application. Please bear in mind, there is no automatic acceptance in this particular case. It very clearly says that as far as possible within 3 months, they will pass an order for rectification. Where during the course of rectification, it also states that this rectification adversely affects the taxpayer, where they say that, okay, this ITC is to be disallowed on any other ground, or 16(5) is not applicable, then the provisions state that the principles of natural justice shall be followed. The taxpayer must be given a hearing. Okay. I think I will take up all the questions relating to all these amnesties as well as other situations also at the end of the session. Instead of taking section wise, I will cover all my sections first. I think it has been 1 hour, 1 hour 5 minutes since I started. I have, sir, how much time I have got?
So you're having still you're having 30 minutes.
All right. Okay.
Yeah.
I will pace it up accordingly.
Yeah.
I hope the pace is not too slow or too fast.
No, it's okay.
All right.
Fine.
Next, I have added this because I have seen I delivered a lecture similar to this one a week ago in Jalgaon, and I had not taken this up. And I did realize that there is a lot of confusion after certain amendments have come. So I thought it fit that I will also include this. So certain aspects relating to RCM on inward supplies from unregistered suppliers. What are the important takeaways from the amendments? First amendment as per the Finance Number 2 Act is that in section 13, subsection 3, which covers time of supply in case of services on which tax is paid or liable to be paid under RCM. All right. So whenever we are required to pay tax under RCM on inward supply of services, we are only discussing services right now because that is where the major confusion lies. There is an amendment saying that now the time of supply shall be earliest of. Now, whatever is highlighted over here is the amendment. Whatever is the earlier portion, that was always there. So the time of supply is the earliest of first, the date of payment as entered in the books of the recipient or the date of debit. So first part, that is the clause A, covers where payment is made. So wherever payment is already been made, there is no confusion. Because wherever payment is made, it is expected that the person has discharged liability under reverse charge because that is the time of supply. The confusion comes up only when the invoice or whatever expense has been recorded in the books of account of the recipient, but payment has not been made. So in that case, what is the time of supply? Clause B says date immediately following 60 days from the date of issue of invoice or any other document by the supplier. That was the original provision. Now the amendment says that this is applicable in cases where the invoice is required to be issued by the supplier. And the third clause C that has been inserted says the date of issue of invoice by the recipient in cases where the invoice is to be issued by the recipient. So after the amendment, we will only discuss after amendment. Pre-amendment will not go that much into detail for the shortage of time. After amendment, what has happened is your time of supply in case of payment of tax under RCM for inward supplies of services which are covered by reverse charge under 9(3) or 9(4). First clause is where you make the payment. It is very clear. The date you make the payment, that is your time of supply. And please bear in mind, it is the earliest of A, B, or C. The second clause is covering only those situations where the supplier is registered and he is issuing an invoice in which he clearly states that tax is payable under reverse charge. As you all know, that a person whose supplies are covered by reverse charge can also be registered for whatever reasons. And where he is registered, he is mandated to issue an invoice. So the second clause covers that situation, and it says that wherever an invoice is issued by the supplier, where he is required to issue an invoice, the date immediately following 60 days from the date of issue of invoice will be the time of supply. The third clause now covers those situations where the recipient is not registered and I'm sorry, my mistake. The supplier is not registered and his supplies are covered under reverse charge, and the recipient is issuing an invoice which we refer to commonly as a self invoice. then the date of issue of that invoice by the recipient, in case where he is required to issue, that will be the time of supply. I hope this amendment is clear. Second part, please also bear in mind that time of supply provisions are only applicable for determining where the time of where you have to pay the liability at the point of time on which the person who is liable to pay tax, when is he liable to pay tax. Any non-compliance with time of supply provisions is going to attract an interest liability at best. Okay. So if you do not follow these timelines, you will have to pay interest on that RCM. Next, I think I've already discussed this in the previous slide. You come to the provisions of section 31, tax invoice. Now I am referring to these two. There is an amendment in subsection 3, clause F, 31(3)(f), which is covering self-invoice. Earlier, under 31(3)(f), there was no timeline to issue an invoice. Now they have said that within period as may be prescribed, and Rule 47A has been inserted to prescribe the timeline within which you must issue this particular self-invoice. 31(2) has always been there, which says, what I discussed is that if a registered person supplying taxable services shall, before or after provision of service, but within the prescribed period, that is 30 days, issue a tax invoice. So those suppliers whose supplies are covered by reverse charge, but who are also registered, are not covered by 31(3)(f). They are still covered by 31(2). They are mandated to issue an invoice. They are required to report that invoice also in their GSTR1, which now gets reflected in our GSTR2B as an RCM yes supply, and that RCM liability automatically gets added in our table 3 and table 4 of, and the ITC gets added in table 4 of GSTR3B auto-populated. Okay. 31(3)(f) covers self-invoice. As I discussed, till now, there was no timeline. Therefore, what a lot of us have done, and which is again also substantiated by a circular issued by CBIC, that if there is a 1718 ka RCM liability, from a, let's take the example of a GTA and take this forward. A GTA who is registered under GST will be required to issue an invoice. He gets covered under 31(2). If you have not paid the tax liability on the inward supplies from a registered GTA, the time of supply is very clear. If you have made payment to him, that is the date. If you have not made payment to him within 60 days from the date of issue of that invoice, because he was registered, the time of supply happens. Your eligibility to claim ITC gets restricted in the time period of 16/4 of the financial year in which the invoice was issued by the registered GTA. In case of unregistered suppliers, say taking the case of a person is a GTA whose entire supplies are covered by reverse charge, and therefore under section 23 is exempted from taking registration. He has not claimed taken registration. He is unregistered. We are taking supplies from him, and we are required to pay the tax. We are required to generate a self invoice. A 1718 liability which was not paid even till 2021 or 21-22. If you pay it in 21-22, your time of supply will not get into that argument. There is an argument which says that you are not even required to pay interest on that. But the logic dictates that you will, yes, you are required to pay tax in 1718 or within 60 days from that invoice. So you will pay the interest. But what about your eligibility for claiming ITC? Since the duty paying document under section 16(2) read with rule 36(1) is your self invoice, the date on which you issue the self invoice, if you issued that in 21-22, then you can claim that ITC in 21-22 right up to 16/4 deadline of 21-22. The deadline of 1718 does not apply to you. Bear in mind, this is only in case of unregistered suppliers whose services supply is covered by reverse charge. That too till now. Now a question that comes is, what after this amendment? I have seen a lot of hue and cry as to abhi 16/4 ka time limit khatam ho gaya. Those people who are doing this for this period from financial year 24-25 onwards, if say I procure services from an unregistered person which are covered by reverse charge, and I, for some reason, whatever it is, I did not make the payment. I did not realize that there was a reverse charge. And during audit or later on at later point, when 16/4 timeline is over, I realized, oh, I have not paid the tax. Majority of the times it happens when you're filing annual return in the month of December, where the timeline is already past 30th November. Now, a lot of people are saying that अभी तो नहीं मिलेगा, क्योंकि self invoice तो बोला है, self invoice has to be generated within 30 days. I am going to present to you an argument which is contrary to this, and I am saying that we are still eligible to claim the ITC in the next subsequent financial year in which we realize and pay the tax. The reason for that is, again, I will go back to time of supply, saying that yes, the date of issue of invoice by the recipient is the date on which this, so the time of supply amendments nowhere affects my eligibility to claim input tax credit, because again, time of supply only governs my output, timing of my output tax liability, which basically I as a recipient am paying to the government. At best, it can only attract an interest liability because I have delayed the payment beyond the time of supply. I will also go one step ahead and say that if I raise that self invoice in December after the financial year, now going purely through the provisions, I am not going by logic. Logically, yes, you have deprived the government of its revenue, so you will pay interest. But if you read the provisions, what has been stated, you are not even required to pay interest. This again, we are not covering situations where payment has been made. We are not covering situations where RCM is from a registered person. Unregistered supplier covered by supply of services covered by reverse charge, self invoice is issued. Please bear in mind, Rule 47A is saying that within 30 days of receipt of that service, you shall issue an invoice. If you do not issue that invoice, self invoice, your 13.3 nowhere says the due date of issue of invoice. If you read the provisions of 13.2, they are very categorically saying that 13.2 is talking about time of supply in case of services under forward charge. Now over there, they say that if the invoice is issued within the due date, within 30 days, then the date of issue of invoice will be time of supply. If the invoice is not issued within the due date, then it will be the date of the time of supply will be the date on which the supply was made. They could have very well made a distinction of due date and date of issuance. In this case also, they are not talking about the due date of issuance of invoice in case in clause C over here. They are saying date of issue of invoice. So if I issue my invoice in December of 2025, then in that case, that date of issuance of invoice will be the time of supply. And technically speaking, I am not required to pay interest. That is one part. Now, my argument saying that why am I not covered by the... Okay, before that, I think 47A, I have already covered what it says. Now, here, interest liability for delay in payment of tax, we already covered the first part, correct? So if you go through the provisions and if you stick to the language of the amendments that have been made, technically you're not even required to pay interest. Logic does dictate, yes, the government is deprived of its revenue, you should pay interest. Second, what are the consequences if I do not raise a self-invoice or I delay raising a self-invoice? Is there a penalty? Yes. Section 122, subsection 3, clause E says if the person does not issue an invoice, there will be a penalty may extend to 25,000 rupees under CGST. So it 50,000. So up to 50,000, there is discretion involved here. So that is the second aspect. And third, what if I issue the self invoice after the due date of 16/4? My answer to you is that it is very much eligible. For this reason, again, you go through section 16(2)(a), which says that you should be in possession of a tax invoice or any other duty paying document. Now this duty paying document is prescribed under Rule 36, Sub Rule 1. Clause A says an invoice issued by the supplier in accordance with section 31, which is basically covering forward charge. Clause B, so a forward charge as well as supplies under reverse charge by a registered person is covered by clause A. Supplies under reverse charge where the supplier is unregistered. The duty paying document, like we said, is a self invoice. Here there is no amendment. It says invoice issued in accordance with provisions of 13(3)(f), subject to payment of tax. 16(4) time limit, if you read, it talks about where invoice or debit note relating to that financial year, you cannot claim beyond the 30th November of the financial year in which to which that the invoice or debit note relates. Now, if you have raised that invoice in the next financial year, the 16(4) timeline will be of the next financial year, which has been the logic even prior to this amendment, which gets covered. This logic that we are applying, that claiming of ITC in case of unregistered suppliers RCM, wherever I issue the self invoice, that financial year ka timeline of 16(4) is my timeline, is substantiated by this circular number 211, which clearly states that in case of RCM on inward supplies from unregistered suppliers, due date under section 16(4) will be determined based on date of self invoice generated by the recipient. Recipient may be independently liable for penalty under 122(3)(e). That is fine. So penalty we are not saying, but penalty is an independent provision. Because you did not issue an invoice or you did not issue an invoice within the timeline that we had asked you to, we are levying a penalty. Because you did not pay the tax within the timeline that we had asked you under section 13, the time of supply, you are required to pay interest. That is also challengeable. ITC, there is no change in 16(4). There is no change in 16(2)(a). There is no change in rule 36(1). Therefore, this remains unchanged. Please bear in mind, as of now, there is no loss of ITC. Now, we move to the next part very quickly. RCM and TDS provisions relating to metal scrap dealers. This has been made effective from 10th of October. The highlights of this scheme, very quickly. This is applicable with effect from 10th of October 2024. Applicable on purchase of metal scrap falling under chapters 72 to 81 in the first schedule to the Customs Tariff Act 1975. Now, we are covering the provisions relating to TDS. Some very quick basics of TDS under GST. We are talking about TDS under GST, please bear in mind. TDS under GST covered by section 51 till now was only applicable to where services were procured by government or government departments or local authorities. So those of you who are dealing with clients who are supplying any services to the government, over there TDS was applicable, where the recipient will deduct a part of the tax, that is basically the prescribed rate is 2% out of the amount that they are paying to you, and they will deposit it directly to the government. They will file a return as a TDS deductor. That amount gets reflected in the supplier's electronic cash ledger, and that amount is available for that person to pay his tax. If there is an excess payment, that amount is also available for him to claim a refund. So now, in this particular, in section 51, there is a clause which says that the government may notify any other person. So, in order to keep a better track, we will not go into the details of what is the logic of getting into government prescribes certain particular services under TDS or certain incomes or payments under TDS. We all know that there is a tracking involved over here where the government suspects that, you know, we need to track these particular, or there might be an evasion here. We want better tracking, better compliance by these people. We want these people to file a return in order to claim the refund of that tax also. They will put a TDS provision there. So any registered person who purchases any metal scrap falling under any of these chapters will have to deduct tax at source. Please bear in mind, it is covered by section 51, which says that it is applicable only where the total value of supply under a contract exceeds 2.5 lakh rupees. So it is talking about total value under a contract. This TDS applicability under section 51 is to be examined qua each particular transaction and not qua the supplier. So if you have multiple transactions with a supplier of purchase of metal scrap, each of which is under 2.5 lakh rupees, the total quantum of the year may be well above 2.5 lakh rupees, still provisions of section 51 do not get attracted. There is no TDS. That being said, if you try to artificially break down one single contract into multiple invoices of under 2.5 lakhs, of course, it will be treated as if you are trying to come out of the provisions by defrauding the government, and consequences will follow. Next, TDS rate, it is 1% CGST and 1% SGST or 2% IGST in case of interstate transactions. Just like we have a tax deduction account number separately to be taken, a separate TDS GSTIN is required to be obtained by the buyer who purchases metal scrap. Or even though, of course, he is registered under GST, he must obtain a separate GSTIN. This particular deductor of tax, that is the recipient of the supply, is required to file a monthly return in GSTR 7 along with the deposit of tax within 10 days from the end of the month. Like we have all seen, I said that sequential filing is made compulsory. You must file your returns. Earlier, the situation was if you did not have any TDS, you need not file a return. Now they said compulsory. They've also come out with the provisions that those of us who have not filed the GSTR 7 for earlier periods, and we are now required to go sequentially. If the return was nil, we have waived off the late fee till now, till the time this provision came. Your existing provisions of TDS and TCS under income tax continue as they are without any alteration. Next, we have seen the TDS provision. Now, what if I am purchasing this metal scrap from an unregistered person? I am a registered person. Okay. So now, I am purchasing this metal scrap from another registered person. I am required to deduct tax at source because, of course, that person is issuing an invoice to me. He's charging GST in it. In most of the cases, the rate is 18%. So how we have explained to our clients, because sometimes it is very difficult for the clients to understand all these different concepts, that the supplier will charge you 18% GST. You will deduct 2% out of that and pay it directly on the government portal by through your TDS GSTIN, that is your TAN, and 16% of the tax you will pay to the supplier. One more thing you should clarify in this particular scenario is a lot of my clients said that we are now selling our metal scrap to somebody else. So we are going to issue an invoice. Should we give him the GST number or regular GSTIN, or he apna TDS wala GSTIN dena hai? So please educate your clients that that is a sale transaction which is covered by a regular GSTIN, wherein that person will deduct tax at source. Through his TDS GSTIN, he will deposit the TDS, and in your regular GST registration, you will get the credit of it. You need not give your TDS GSTIN to your buyer where you are selling metal scrap. Only in cases where you are purchasing metal scrap and the supplier is registered, you will deduct tax at source because he's charging GST. In those cases where the supplier is unregistered, there can never be a question of TDS because he's not charging any tax to you. And therefore, the government has said that where the supplier is unregistered and the buyer is registered, you are required to take registration. You are required to pay tax under RCN. Please bear in mind one thing, that if you are purchasing metal scrap and you are not registered, the provisions of section 24 may dictate that any person who is required to pay tax under reverse charge must obtain registration. However, in this particular situation, this reverse charge is applicable only where the recipient is a registered person. So if your client is an unregistered person who is purchasing metal scrap from another unregistered person, he need not obtain registration merely because he is required to pay tax under reverse charge in this particular situation. All right. For everybody's ready reference, I have put, they are only simply referring to that chapter 70 to 81 of Customs Tariff Act. What all is covered by 72 to 81, I have covered over here. I hope I have covered this TDS and RCM on metal scrap. We will quickly run through this 74A before we go to IMS, because I think more people will be interested in IMS and the other parts of it. 74A, like I said, this is a common adjudication provision they are going to get rid of section 73 and 74 from financial year for adjudication for the financial year 24-25 onwards. And for adjudicating or determination of liability or determination of tax paid or not paid or short paid or erroneously refunded or ITC wrongly availed or utilized, irrespective of whether it is for the reason of fraud or suppression of facts or misstatement, willful misstatement, or otherwise, they will both get covered by 74A only for financial year 24-25 onwards. So quick overview, up to 23-24, section 73 we have, correct? Non-fraud cases, 74 fraud cases. What does 73 say? That the officer must pass an order within 3 years from the due date of annual return, and a show cause notice is to be issued 3 months prior to the due date of order. Here 74, the timeline is 5 years from the date of annual return, and show cause notice must be issued 6 months prior to the order. The new timelines from financial year 24-25 will be that there will be a common timeline for fraud as well as non-fraud cases. The timeline will be 42 months. Okay, that is 3.5 years from the due date of annual return for issuing of show cause notice. The due date of annual return still remains a very important date. As of now it is settled on to 31st December after the end of the financial year. Normally, it is seen that it is not extended, which is also a good thing, because since that does not get extended, automatically your adjudication timelines also do not get unnecessarily extended. Of course, they do have the notifications that they issue for extending. But now, basically, the timeline of 3.5 years or 42 months is for issuing of show cause notice, and 12 months from the date of issuing the show cause notice, the officer has to pass an order, and this 12 months can be extended by up to 6 months by the commissioner. So if you look at it in totality, the officer gets 4.5 years from the due date of annual return for passing of the order, and these 4.5 years can be extended by up to 5 years. So 73 timeline in turn has gotten extended, because earlier also order was to be issued under 5 years for 74. 73 was 3 years, which now gets extended to 5 years. One more amendment that has been made is that you do know that under 73 as well as 74, there is a timeline given that if within 30 days of issuance of show cause notice, if we pay the entire tax amount along with interest, the entire penalty will be waived and the proceedings will be deemed to be concluded. Similarly, under 74, instead of no penalty, it is 25% penalty in case of fraud cases. Now, they are saying that this 30-day timeline, we are extending it to 60 days. So if you make the payment of tax and interest even after issuance of show cause notice within 30 days, within 60 days, we will waive off the penalty in case of non-fraud cases. We will only take 25% penalty in case of fraud cases, and the proceedings will be concluded. Like I said, quick comparison. I think we've covered, I've just covered all of this right now. This is for your ready reference. Penalty, if you look at it, nothing has changed as such. So the provisions of penalty still remain. Right now, they were under 73 and 74 separately. Now, even under the common 74 section, there is a subsection which covers penalty for non-fraud cases and penalty for fraud cases separately. The quantum of penalty remains absolutely the same. However, the only change that is there is that like I said, in case of 30 days, the extension is by another 30 days. Now they give you 60 days. This is just a chart for all of you if you want to refer to it. The timelines that the ones that are marked in gray have already passed. For the future periods, these are the due dates for passing of show cause notices and orders under 73 and 74. With that quick overview of 74A, we now come to invoice management system. Now, those who are in compliance, just that once a system gets settled, something new keeps coming up. Now that GSTR 1, 2, and 3 had failed, so GSTR 2 went away, GSTR 3 went away. Now comes this IMS. which a lot of people are saying that it is nothing but old wine in a new bottle. It is nothing but GSTR2 with a new changed nomenclature. Whether it will stay or not, time will tell. But we will all agree that the GSTN, the department, as well as the taxpayers and tax professionals have come a long way in these last 6-7 years of GST. So in terms of technology, we are better equipped. In terms of understanding the problems, we are better equipped. I am not saying that there are no problems in IMS. There are a host of difficulties, but at least from what we have heard, the department, or this is basically not a department, this is Infosys or GSTN running this, is quite keen on understanding what are the problems and taking proactive steps in making improvements. So therefore, right now, this has been introduced as an optional facility. If you want, right now, you can completely ignore IMS and keep filing the returns as you were filing before introduction of IMS. Nothing will change. However, it is still in your interest to understand IMS and start implementing IMS in your offices, because eventually, if we see the advisories that are issued by GSTN, that we will be hard locking the data from January. Then there was a lot of backlash, and then they went back and said that not from January, but in the near future, we will be hard locking the ITC part also. The intention right from inception of ITC has been very clear that we are going to use systems to allow only the proper eligible ITC to the last point where we can put the compliance parameters we are going to put, and only allow that much ITC. And we are going to freeze them. We don't want to give a lot of discretion to the taxpayers in terms of claiming their ITC. So this right now is an optional facility. Very soon it will be made compulsory, depending on how it performs. What is IMS? If you were to understand it very simply, it's a filter between your GSTR1 and GSTR2B. Those of you who are filing returns will know that first the supplier files your GSTR1, his GSTR1. Those invoices get reflected in our GSTR2B, based on which we are filing our GSTR3B. This IMS is sitting between GSTR1 and GSTR2B. So all those invoices which flow from GSTR1 before flowing to GSTR2B will now first get reflected in IMS. In IMS, the recipient gets the option to either accept those invoices, reject those invoices, or keep the invoices pending. There is fourth option right now of not taking any action. And right, since this is an optional facility, they have said if you don't take any action, it will be deemed that you have accepted those invoices. Now, all those accepted invoices, including the deemed accepted invoices as well as credit notes, will flow into your GSTR2B. Those that you reject in your IMS will not flow to your GSTR2B, or they will flow to your GSTR2B as rejected documents, but they will not form part of your auto-populated GSTR3B. And once you file your GSTR3B for that particular month, the rejected documents will get flushed out of the IMS permanently. The documents that you keep pending will remain in that IMS. They will not flow to your GSTR2B for that particular month. They will continue to be in your IMS till the 16/4 timeline. So if the invoice is dated of financial year 24-25, it will remain in IMS till 30th November 2025. Thereafter, it will again automatically get flushed out from the IMS if it is not claimed. So whatever appears in your IMS, 3 sections, those invoices that you accept or you do not take any action on, they flow into your GSTR2B of the month. Once you file your GSTR3B, those accepted invoices get out of the IMS and come into your GSTR2B and eventually your 3B. Those invoices that you reject, once you file your GSTR3B for that month, get flushed out from IMS also, and nowhere they will come. Those that you keep pending stay in the IMS for that month and get carried over to the subsequent month till the time the 16/4 timeline passes. And once that 16/4 timeline passes, if you accept them in the subsequent period, they will flow to your 3B and get flushed out from IMS. If you reject them subsequently, they will get flushed out. Or if you keep them pending, eventually after 16/4 timeline, they will get flushed out. I hope I have been able to summarize this part. If you were to understand the process flow in a diagram form, this is the present scenario that I explained. 1A or invoice furnishing facilities in case of QRMP taxpayers. Those invoices come into the recipient's 2B and he files his 3B. Now, as I said, this IMS will sit as a filter between 1 and 2B. IMS, the actions are to be taken by the recipient. The invoice gets uploaded in 1 or 1A or IFF. Nothing changes in that regard. The same is required to be filed by the 11th day of the next month. In case of IFF, if I am not mistaken, it is 13th. So therefore, till now, what was happening was that on 14th, our GSTR 2B was getting generated. Now, since they keep flowing, as soon as so certain peculiarities of this IMS is that the invoices, as and when they are uploaded by the supplier in GSTR1, the e-invoices almost immediately flow into your IMS. So it's a real-time thing. Those cases where it is not an e-invoice, I think it is within 1 day or within a few hours, it flows into your IMS. So the departments or the GSTN's thinking is that the taxpayer during the month itself, the recipient will view his IMS, take action. If he rejects it, then again, they will go back to the supplier gets a chance or whatever it is. You will contact the supplier and those things will happen. Even after the GSTR1 is over, on 14th, the IMS still continues, and out of that IMS, now a draft GSTR2B will get generated. So those of you who are following IMS and filing their returns, you would have noticed that for the month of October, when we filed the first return, when this IMS came in November, any changes, so even after 14th, right up to the date of filing of GSTR3B, we can make changes in IMS. We can change the accept to reject or a pending to an accept or whatever it is. As soon as you make any changes after 14th in IMS, you are mandated to recompute your GSTR2B, and immediately the GSTR2B gets recomputed. So the GSTR2B now on the 14th is a draft GSTR2B. You can change your GSTR2B right up to the date of filing. The day you file your GSTR2B, 3B, I am saying 20th because that is the due date. That GSTR2B, which is draft, once you file your 3B, becomes a static GSTR2B. Now, as I explained, any changes that are made right from 14th till the filing of GSTR3B, you will continue and you will redraft. And those are, so whatever you've accepted will come in your 2B and flow to your 3B. Whatever you reject gets flushed out. Whatever you keep pending will continue in your IMS. Now, there are a lot of scenarios which it requires a separate session on IMS. And right now we need not go into all of those. But for the benefit of all the participants today, my recommendation to you would be do start following IMS, but follow IMS only selectively, in the sense that do not reject anything, because there are consequences of rejection which we are yet to, come fully. For example, I will tell you, after e-invoices come in, it is seen that in almost all cases, the 2B contains at least one particular supplier's invoice. Even for that matter, a supplier as big as Infinity Retail, that is Chroma, you may have seen, by inadvertently issues an e-invoice in the name of your client. Then they realize it is wrong, but 24 hours are passed, they cannot cancel the invoice. So to cancel that e-invoice, they issue a credit note, which is also e-invoice based, and they issue another invoice, correct, which is an e-invoice. Now in your GSTR2B, you see 2 invoices in your B2B section and 1 credit note in your CDNR section. The fun part is, it is an optional facility. You can mark anything as accept, reject or pending in invoices. In credit notes, they do not allow you to keep anything pending. You either have to accept or you have to reject. Now in invoices, if you accept, it's fine. even if you reject something, there is no reduction of the supplier's liability. It is supposed to give an intimation to the supplier that the recipient has rejected this particular invoice. He will take some action as to why did he reject it. Was there anything wrong? And that is a subsequent part. But for GST liability and ITC purposes, nothing changes. Of course, ITC, the recipient will not get the ITC because that invoice will never flow in 2B. But supplier's liability is not dependent. But in case of credit notes, since you are not allowed to keep it pending, you either accept or you don't take any action, in which case it is deemed accepted and it will come into your 2B and it will reduce your ITC. If you reject, then your ITC will not go down, but that amount will get added back to the supplier's liability. So there are implications. Now, going by giving the same example that I gave of a person who issued 2 invoices and 1 credit note. What if somebody does not take any action in invoices or rejects everything? We say that, okay, we are going to reject whatever is not applicable to us very diligently. We reject the invoice also, because we are only seeing 1 invoice, and in IMS we'll see 2 invoices. So the wrong invoice we reject, and the credit note also we go and reject. See the impact that is going to happen. The supplier's liability is not going to get reduced to the extent of the rejected invoice, but it will get added back to the extent of rejected credit note. In your recipient's GSTR 3B, nothing will change. Your GSTR 2B will contain only 1 invoice. You are happy, but the supplier will face a lot of problems. So till the time they iron out all these problems, and there is also a fear as to if I reject something, तो वो permanently चला गया, तो अभी मैं क्या करूंगा? ठीक है? So इसके लिए my suggestion to you is start following IMS. Do not reject anything, because till now everything was directly flowing into your 2B, and you were managing it by those of you who are also following circular number 170. That entire amount as per 2B comes in your table 4A5, out of which ineligible ITC you reported in 4B1, that is permanent reversal, and temporary reversal for whatever reason, if you had not received the invoice, or you did not know, you had not accounted for that invoice, or there was a dispute or whatever it is, you wanted to keep it pending, you were reporting it in 4B2. Now in the next month when you were claiming that ITC, you were adding it in your 4A5, in which the table used to get read. That same amount in 4A5 you report in your 4D1, correct? Now I suggest you don't reject anything. Keep everything accepted. Only those invoices which are appearing in your IMS, but you have not recorded in your books of account, because whatever, the invoice has been received, but the goods are yet to be received or services are yet to be received. In that particular case, you mark it as pending. Let it remain in IMS. I will tell you why I am saying this. One part is why not reject, you have already understood. Second part of why not rejecting is, as I understand from the scheme of IMS, the IMS, which is again does not have any legal backing, it is only been issued by GSTN. It is the accept, reject and pending actions that we are doing. The actions are expected to come from a commercial point of view more than a legal point of view. I will explain this by an example. If you have purchased a motor vehicle, and for whatever reason your GSTN is given there, and that motor vehicle dealer has reported that invoice and it appears in your IMS. Now you have purchased a motor vehicle and that credit is blocked under 17.5. Okay. You have purchased a motor vehicle. That transaction commercially is a valid transaction. However, the credit is blocked under 17.5. Shall I accept the transaction, let it come in my 4A5 and then report it under 4B1 17.5 ineligible credit, or should I reject it in the IMS itself is a question. The answer to that is do not reject it in IMS. If that is a valid transaction commercially, but legally the ITC is ineligible, accept it, let it flow to your 2B and your GSTR 3B and follow circular number 170, whereby you say that this is my ineligible ITC. Only if that transaction does not belong to you, or if it is a wrong commercial transaction where the invoice is incorrectly stated, you can reject it. All right. That is one part of rejection. Second part, why I'm saying that you let everything flow. So one part is this, that if you reject, that ineligible ITC is also expected to flow into your 2B and 3B, and you report follow circular number 170. One part. Second is, the major problem that majority of us are facing now is the department has gone to the extent of issuing notices. I heard that yesterday somebody was telling me that Karnataka state authority has issued notices before the due date of filing of return for October, before the 30th November timeline has passed, that whatever ITC you have reversed in 4B2, which is now appearing as an opening balance of your ITC reversed and reclaimed ledger. Okay, they have created a separate ledger for it. Now, since you're not going to be able to reclaim it, you reverse it. Now, how do you reverse an ITC which you have never claimed? We have also seen notices being issued to threaten that if you don't reverse, we'll start proceedings to reverse your ITC. Kar lo jo karna hai, because what will you reverse if something was never claimed? Something that has been put in 4A5 and 4B2 is reversed already, is a temporary reversal. In 4C, it has never come. You have never claimed that ITC. So the point was, because the balance of that 4D, the opening balance of ITC reversed and reclaimed ledger was inflating, and there was no way for them to keep a track, because what they want to keep a track of is whatever you add in 4D1 as previously reversed, that should not exceed your opening balance of your ITC reversed and reclaimed ledger. But they had no functionality to do that. Now, this is IMS is going to solve, and that is one of the contentions, in my opinion, of biggest contention of bringing this. And this will be useful for us also, those who are following circular number 170, that you keep those invoices pending. So ये जो सब problem था, ये जो झंझट है of putting those invoices in 4A5, putting them in 4B2 as temporary reversal, then reclaiming them in 4A5 and putting it in 4D1, and then that balance ka reconciliation, all that problem will go away. Because you will only, once you keep those invoices pending, they will remain in IMS. They will never come in your 2B. If they never come in your 2B, they will never flow to your 4A5, and you will never have to report them as 4B2. Only when you want to claim those invoices in the subsequent month, you accept them, let it come to your 4A5. You will not have to give that reconciliation. I hope I have tried to resolve all the basic major problems of IMS that people have been facing. Sir, I will cover this in the next 5 to 7 minutes, and then we can proceed for the Q&A session.
Sure, sure. No
Yeah. I added this last part is because I realized that, again, there are so many things important that how much to give is a problem, and you realize that, okay, this is also important that the people should be aware of. So I've tried to select certain parts of certain circulars or certain selected circulars, notification advisories, and put them before you. This does not cover all the circulars, notification advisories. First, like I said, they issued a circular number 224 when they introduced GSTR 3A. So if you want to understand what is GSTR 3A and how to follow 3A even for amnesty, you can refer to this circular. This circular was specifically issued for as guidelines. Now in Maharashtra, our state commissioner had issued a trade circular earlier itself, stating that if an order has been passed in first appeal, and in the absence of an appellate tribunal, what does the taxpayer have to do? To write to the department that I intend to file an appeal, but because the appellate tribunal has not been formed, I am not able to file an appeal, and don't proceed with recovery, because 3 months after passing of order, they can proceed with recovery. That trade circular simply stated that you submit an exhibit to us, submit a declaration, and the matter is over. CBIC now in 2024 came up with an idea saying that, okay, GST appellate tribunal has not been formed, again, into bracket for no fault of the taxpayers. But why should the department be deprived of at least the part payment that we want from the taxpayer? If he is intending to file an appeal, we want the taxpayer to commit. and that 10% or 20% earlier and 10% now, which is required to pay as part payment as a precondition for stay on recovery, we want that payment also. So what the guidelines that were issued is, they have put two conditions. One is that you will pay the pre-deposit, and how will you pay? They have also given there, you go to services, ledger, payment towards demand, and there you will see the order ID and the demand, and against that you pay that 10%. Earlier it was 20, now it is 10. Now, if you have already filed DRC3 and made part payment, in order to link that payment with that particular demand, they introduced 3A, and this has also been given over here. Apart from this, you will also be required to submit a declaration within a specified timeline. So if both the conditions are satisfied, that you make the part payment and you submit a declaration, only then we will give you stay on the recovery till the tribunal comes into operation. Otherwise, we will proceed with recovery. The State Department of Maharashtra, and I think almost all state departments, have immediately withdrawn the previous circular and issued this circular. The legality of this circular can be challenged, can be discussed separately. My job today is to tell you that this is an amendment that has been made, and they expect you to pay the part payment and file the declaration to stop the recovery. Next circular 225, it talks about clarification in respect to various issues relating to corporate guarantee between related persons. Again, I will not go into the details of it. I have summarized these circulars over here. This will be available with you to see. The whole point was that after that 28 sub rule 2 was introduced to value the corporate guarantee between related parties. How do we value it before the rule was brought in? How do we value it after the rule was brought in? What about the ITC? All these problems or issues were clarified by way of this circular. Next, circular number 228 clarified that RERA is considered a governmental authority, and the statutory collections made by RERA are exempt under serial number 4 of the exemption notification for services. Next, they stated that exemption for accommodation services, which are costing less than or equal to 20,000 rupees per person per month, which is provided for a minimum of 90 continuous days with effect from 15th of July. So an amendment was made. If you all remember earlier, hotel accommodation or any other accommodation, hostel accommodation also for that matter, there were slabs. Then they removed the slabs, and everything from rupee 1 was brought in at 12%. Then there were representations made that what about those hostels or people who really need, the accommodation, and they are having to shell out GST for it, where the intention was not to give any such benefit to the hotels. So they said that, okay, we will give exemption to those people who are charging less than or equal to 20,000 rupees per person per month for the accommodation, and that accommodation is given for a minimum of 90 continuous days. We are going to exempt it. That clarification is put here. They have also clarified that from 1st of July 17 to 14th of July, because in between there were so many problems. So those people who have not paid tax for whatever confusion that has been done, we are regularizing it on as is where is basis. Again, that as is where is comes in. Again, what it means is those people who have paid taxes will not get any refund. Okay. Next circular 229, clarification regarding GST rates and classification of goods after the 53rd council meeting. Certain important ones: solar cookers using dual energy, they said that this gets classified under 8516. Applicable rate is 12%. All types of sprinklers, including fire water sprinklers, will attract 12% GST under serial number 195B. Any past period issues that were there will be regularized on as is where is basis. The parts of poultry keeping machinery, they have carved out the parts of that poultry keeping machinery. They will be classified under 8436 with 12% rate. The relevant entry of serial number 199 has been amended explicitly to exclude parts from it. And any past period issues in this regard will also get regularized on as is where is basis. Then there has been an amendment in the definition of prepackaged and labeled to exclude any agricultural farm produce in packages of containing more than 25 kgs or 25 liters. They are saying that these agricultural farm produce in big packages do not get covered by pre-packaged and your labeled, and will not attract a 5% GST levy. Wherever there are problems prior to this clarification, they have been regularized on as is where is basis. So many as is where is came. That is why they had to also issue a separate circular for what do we mean by as is where is. Next circular was issued, very long awaited circular clarification on ITC on demo vehicles. We had so many advance rulings from so many different states. One single company making applications in several different states, getting different advance rulings in different states. Some states saying yes, ITC on demo vehicle is eligible. Some others saying that no, it is ineligible under 17(5)(a). Finally, CBIC has come up. It was always there in before the council. I do not know why it took this long. What they have said is that ITC is available on demo vehicles which are used by authorized dealers to provide trial run and demonstrate the features. Those dealers who are working on a principal agent relationship, where the dealer is only acting as, or rather providing a marketing service, and where the vehicles are directly invoiced by the manufacturer and not by the dealer, in those cases where such dealers are procuring demo vehicles, they will not be eligible for ITC because there is no further supply of those vehicles. That is what they are trying to say. They have also tried to link it to, they are talking about such vehicles. So in the exclusion, such vehicles also covers the demo vehicles which are used for sale of such vehicles. And in these particular cases where the agents are not selling any vehicles otherwise, they should not be eligible for the demo vehicles. And the third clarification that they gave was, irrespective of whether such demo vehicles are capitalized in the books of accounts of the dealer or they are kept in stock, you are still eligible for the ITC. So that is one welcome clarification. Next clarification is regarding certain services. I am only covering a few. Preferential location charges. They've clarified that those PLCs which are paid along with the consideration for construction services to the builder, they are part of a composite supply and will attract the same rate of tax as the main supply of construction service, not separately taxed at 18%. Next clarification comes with regard to affiliation services provided to colleges as well as schools. Now, we all know that there is a serial number 66 and in the exemption notification number 12/2017, which talks about education services. So services provided by educational institutions to its students and staff are exempt. Certain services provided to educational institutions by third parties are also exempt. There are services provided by way of boards for conducting exams to such educational institutions which are also exempt. Now, in this regard, the clarification states that affiliation services which are provided by universities to the constituent colleges do not get covered by this exemption, and 18% GST is applicable thereon. The affiliation services provided to schools, so we have this ICSC, SSC. So state board gives affiliation as SSC, central boards give affiliation as ICSC, or other boards they might be there. So these affiliation services provided to schools by central or state educational boards or councils are also not covered by exemption. They are taxable. This is not akin to conducting exams. These are affiliation services provided. What they have also clarified, that a separate exemption has been granted to government schools. The schools which are owned and controlled by governments, those government schools, the affiliation services, they have clarified that they have specifically granted exemption with effect from 10th of October 2024. And the GST on affiliation services provided by the central state education boards or council or other boards to all schools, which it has been regularized on as is where is basis from the period of 1st of July to 17th of June 2021. The reason 17th July, June 21 is on 18th of June 2021, a circular had been issued clarifying the fact that these affiliation services are not exempt and they are liable to tax. What they are now saying is that by way of this circular, we are regularizing from 1st of July till 17th of June on as is basis, forget it. From 17th of June onwards, you are required to be compliant with the law. Nature of ancillary or incidental services supplied by GTA. Next clarification. when the GTA is supplying transport of goods by road services, and during that course, he also provides loading, unloading, packing, transshipment, temporary warehousing. They have issued a clarification saying that all these services are a composite supply, and the principal supply will be treated as transport of goods, and all these are ancillary supplies. So where he's also supplying other services, the entire bunch gets covered by transport of goods, a GTA service, either 12% forward charge, 5% reverse charge. He need not charge 18% separately for these warehousing services or other services. Next, there was a CGST amendment rules 2024. These are certain only important highlights. This form GSTR 1A was introduced. You are all aware of this. After one, if there are any mistakes in one, so after filing one, but before filing 3B, you can either amend or add records to that GSTR 1, so that because your GSTR 3B now gets auto-populated as per 1, you can file this GSTR 1A and avoid these mismatches between 1 and 3B. Okay. Next, B2CL invoices that are reported in GSTR 1. Earlier, interstate supplies where invoice value is 2.5 lakh or more was reported in B2CL. Now that limit has been brought down to 1 lakh rupees with effect from 1st of August. Very welcome change for composition suppliers. The annual return that was required to be filed GSTR 4, the due date was 30 days from the date of end of financial year. Now that has been extended for financial year 24-25 onwards. It will be 30th June. So they are giving you 3 months instead of just 1 month. Next, amount deposited in cash ledger on or before the due date of filing of return to be excluded. Another very welcome change. We know that section 50 subsection 1 read with rule 88B sub rule 1, interest on payment of output tax. Now the question was, okay, that one clarification came is that where there is a delay in filing my 3B, then only that portion of tax that I pay through the cash ledger, I have to pay the interest. I need not pay interest on the credit portion that was available. But there were a lot of cases where cash had been deposited in the cash ledger, but for whatever reason, the return could not be filed. Then the argument was, since we've already deposited the cash before the due date, we should not be saddled with interest on this part. So now there are certain High Court rulings on this regard also. They have accepted the position and then stated that if you have deposited the tax in the cash ledger on or before the 20th, assuming the due date to be 20th, and if you file the return belatedly, we will pay off the interest to that extent. Next, appellate tribunal procedure related amendments have been made. The rule 110 and 111 of the CGST rules have been entirely substituted, and the new rule 113A has been introduced. DRC 04 has been automated. Many of you must have seen all these DRC 3s that we file. The officer is required to send an acknowledgement in DRC 4. For many years, no acknowledgement was there. In the recent last month, suddenly dhad karke sab portal pe uska acknowledgement aa gaya. The result is not that the department is working overtime to clear off the pendency. The reason is that it is automation of portal. And again, for this particular task, it is also necessary that already when the department is burdened with so many things that they are required to do, this is merely an acknowledgement that we have acknowledged that you have made a payment. The officer need not be required to go through it and give an acknowledgement. This can be automated. He can always verify it at a later date. Therefore, this will be automated and DRC 4 will be issued. DRC 1A में एक और problem था. A lot of people are facing this issue. Once a DRC 01A pre-show cause notice intimation was issued in part A, and we submitted a reply in part B, the departmental authorities were saying that although they accepted the contention, they said that once we issue DRC 01A, we are required by the system to go issue a DRC 01 and only then pass an order in DRC 07 accepting your contention. So they have introduced part C to DRC 01A, where the proper officer can now, if he agrees with the reply of the taxpayer in DRC 01A part A that he submitted in part B, he can accept the reply in part C and close the matter there. He need not issue a DRC 01. So this is again a welcome change. like we all saw in earlier slides, this new DRC 3A form has been introduced by Rule 142, Sub-Rule 2B, to link the 3 verse 3 with the demand. Second Amendment rules were also introduced quickly. 47A, we already saw. 89 rule relating to export, that whole 1% and other part where the procurements were at 1%, sub-rule 4A and 4B was applicable. Both the sub-rules have been omitted. So now all those exporters who are filing refund applications where procurements have been done under notification 40/2017, that is under 1%, you need not go and file that application under any other for that portion. You have to file a regular application under 89(4) as that refund of excess ITC. Rule 9610 relating to, again, exports, where the export was restricted, where you had taken certain benefits, has also been omitted. ITC, as per this big change, I think the speaker for the earlier session has already covered this part extensively. Table 8 of GSTR 9, only the first row, Table 8A, has been amended. Instead of 2A, now the ITC will appear as per 2B. The disastrous consequences of it, she must have explained to you already. I will not get into it. For these goods, the rate of tax has changed from 18 to 12% with effect from 15th of July. Cartons, boxes, corrugated as well as non-corrugated, milk cans, solar cookers. Just for your information. Last slide relating to advisory. This is an important advisory. Why? Because we have all seen that e-invoicing with effect from August of 2022 or 23, if I'm not mistaken, 22, 10 crores and above taxpayers, e-invoicing was made mandatory. It is only a matter of time that it will come down. Similarly, all those taxpayers who have turnover of more than 100 crores, they restricted the timeline for generating the IRN of 30 days. So from the date of invoice, if you do not generate an IRN within 30 days, you cannot generate an IRN at all for that particular invoice. Now from 1st April 2025, they are planning to reduce this limit from 100 crores to 10 crores. So now whoever is excluded is only taxpayers from 5 crores to 10 crores are excluded from this. Very soon, this will also be brought down. So, and they also state that this will apply to all types of documents, invoices, credit note, debit notes, for which IRN is to be generated. As of now, no such reporting restriction exists for taxpayers less than 10 crores. So it is necessary that you prepare yourself as well as your clients for this particular change. With this, I finish my presentation. I thank all of you and the chamber for giving me this opportunity and for a very patient hearing. Thank you.
Thank you, Aditya ji, for a very exhaustive coverage, I would say. But it was really interesting, and I'm sure all participants have gained so much today. I would like to invite Kavit Bhai for a hearty word of thanks. And after word of thanks, we can have 1 or 2 queries if Nidhi madam is available on 99C. So, Kavit Bhai, you can.
Thank you, Jaydeep bhai. Aditya Surti ji has covered so many topics. The new circulars, invoice management system, practically and very elaborative manner. And I think many are having many queries before this. This has been resolved due to its elaborative presentations. I think MCTC is very feeling heartfelt to the Aditya Surte ji. Thank you, sir, for giving this presentation.
Thank you.
Thank you.
Sir, there are a couple of questions.
You can take it if you want.
Yeah. So I will quickly take them, whichever are possible to be answered quickly.
For that, can we have the person who has asked the question so they can unmute and ask?
Directly they can
Because,
ask if they are available, so it will be better.
First question is asked by Ravi. Registration was cancelled and pending returns were filed by the supplier. whether ITC available for recipient of goods, services or goods after registration is restored after say 2 years. Yes, so this is one practical problem, that although they have stated that if your registration was cancelled and say after 2 years your registration gets restored, so we will give you 30 days from that day to file your return and claim your ITC for the person whose registration was cancelled. But the practical difficulty is that till the time his registration stands cancelled, his suppliers have already reported the invoices in B2C part. Because for a taxpayer whose registration is cancelled, I cannot report that in B2B. So this practical challenge remains as to if they are not appearing in my 2B at all, how do I claim? So I think the situation only covers those scenarios where it was because they also say that as on the date of cancellation, your 16.4 timeline had not passed. So they have not envisaged this aspect. They are only saying that if they were already reported and you did not claim and your registration got cancelled and now 16.4 timeline is passed, now we are allowing you. So they need to address this situation also as to what is to be done for reporting, because 36.4 will still cause a problem. Next is by Umesh Surve. Does he want to ask the question himself?
Umesh, please unmute yourself.
Otherwise, I will read the question for everyone.
You can read. Yeah.
In case of
In
rectification,
case of rectification, if proprietor has expired, then what is to be done in case of liability under 16.4? Interesting. So your order has been passed, you have not filed an appeal, and the proprietor has expired. Now, again, the recovery provisions can be looked into for reference, which say that where the business is taken over by a legal heir, then that person is required to pay off the liabilities. So that person naturally is also entitled to apply because he's taken over the business. In case that business is closed, then the recovery provisions state that the legal heirs can still be made liable, but only to the extent of the estate that they have inherited from the deceased. So my answer to this would be, if a person the proprietor has expired and there is a liability standing and appeal has not been filed, because if an appeal is filed, obviously it will be taken care in appeal, but you are covering a situation where an order has been passed and a subsequent appeal has not been filed, and that special procedure is applicable to you, the legal heir can apply and it will have to be entertained by the proper officer. Third question by Mr. Jay Thakkar, if he wants to ask it himself. Okay, I will go ahead. With regard to 16.4 order, we had applied for rectification before such instruction for rectification came, as we had no amount, as 10% was too high, similar to what I explained to you. Now, what is the procedure to follow in the amnesty? Okay. Now, we had also in few situations filed a rectification application, although we were well aware that this does not get covered under this rectification. However, if you see that for amnesty, you have to make a separate application and all those things that are there. So they have prescribed separate forms. Here, the special procedure has been prescribed, but if you see the procedure, it's nothing but a regular rectification application that is to be filed, and the proper officer is required to dispose it off considering the 16.5. So because it does not get covered under the regular rectification under 161, they have prescribed the special procedure under a different section. Now, there are two ways of looking at it. One, I would say that if you've already filed a rectification, the officer can very well, because there is no separate form, it is the same rectification application. The officer can very well take that rectification application into account, pass an order allowing the ITC under 16.4 in terms of the special procedure granted. If not, then he will have to reject, or even if he does not reject that rectification, you will have to file a separate rectification application, because what the only second, why I'm talking about this second option is, Because the procedure says that you will apply for rectification within 6 months from the date of issue of this notification, which was on 8th of October. So one view that the officer may take that, sir, you have applied for rectification before. This special procedure is for rectification after. So you forget that rectification application and now you pass you file a separate application for rectification under this after 8th of October and I will entertain it. Mr. Sujoy Mehta has a question.
Yeah, hi Aditya. Just wanted to check on the amnesty which you had said that if the amnesty is for 5 years from 17-18 to say 21-22.
Amnesty is only for 17-18 to 19-20.
If the order comes for 5 years, then do we need to break the amnesty for specified period or we have to pay for all the years?
As I explained, the amnesty provisions do not grant you any provision for breaking up the order. They are very clear. If it is for multiple financial years, eligible as well as ineligible period, you pay the tax entirely for as per the order or as per the demand. And thereafter, we will grant you amnesty relating to waiver of interest and penalty only for the eligible period, and for ineligible period, you will be required to pay interest and penalty.
Achha, and then we can't go for appeal also on those unspecified periods.
No.
No.
I will tell you why. Because the moment you have paid the tax as per the order, you have foregone the appeal. Now, once you go into amnesty, the only appellate remedy you've got is against the rejection of amnesty scheme. So even if you have filed an appeal against it, they require that you withdraw your appeal before you go in for amnesty. So yes, that is where if I were to conclude the scope of amnesty, in my opinion, this amnesty is again, like all other previous amnesties, unfortunately, very complicated. And the scope is way too limited. It appears that they are only focusing this amnesty on very specific kind of cases where, because there has been a lot of delay in adjudication in GST, the interest has mounted up. And there must be a lot of representation that must have gone, that there were genuine interpretational errors at the beginning. Therefore, which we are admitting that in the initial period, there was a tax liability. But because the adjudication has happened at such late time, so if you have adjudicated after 5 years, 90% of your tax liability is covered in your interest because 18% per annum. So now we are ready to pay the tax, but this interest and penalty is becoming too much. And that is the limited scope that is coming out of this for this amnesty, that you pay off the tax and we'll give you the waiver of interest and penalty. But we don't want any other natak. You are saying that हमको टैक्स भरने को आना था, तो जो भी इसके हिसाब से ऑर्डर के हिसाब से टैक्स है वो भर दो. उसको अभी ब्रेकअप करके बाकी का अपील में जाओगे और या फिर कुछ इश्यू के लिए अपील में जाओगे, वो नहीं चलेगा. This is what we are giving, take it or leave it sort of a thing. So the scope becomes very, very limited because you're not allowing in case of erroneous refund, you're not allowing in case of interest on what this, that is still a very small problem, delayed filing of 3B. You are not allowing us to pick and choose certain issues which are legitimately wrong interpretations by the department to contest in appeal and just basically opt for proportionate amnesty. You are not allowing to break up the order in multiple years, whereas we are not the ones who have asked the department to issue an order for multiple years together. You could have simply issued orders for each year separately, and right now we would have been in a situation to opt for amnesty for a certain period and contest the other years. So for no fault of ours and the restrictive nature of the amnesty, so we'll have to see what is the response to the amnesty. But it seems to be very restrictive.
I think we have stretched our time limit for today's session.
And we've all the questions have also been answered. Sir.
Yes.
So it was very, very interesting, and we never expected it will be prolonged. So it's a very credit goes to you both the speakers for this. Yeah, coming back.
So we are closing now, and if anyone has any queries, please reach out to them in a person or in a group where they will give you the answers. And all the attendees are, thank you so much for giving Sunday's morning time for the lecture. And yes, we are going to share these PPTs to each and everyone in our WhatsApp group. Thank you.
Thank you. Thank you so much, everyone.
Thank you, sir. Thank you very much.
Yeah, thank you.